Bracing for impact. Michael Kramer wrote a great piece today, bracing for impact, and he wasn't just talking about the market. He was talking about incoming big storm we're going to get here in the New York City area. I don't really know what's going to happen. These guys overhype this thing, but at any rate, so we've had a pitching change here. Hirsch was not available to pitch. Peter, hold on, let me get you in here. I had a speaker. Here we go. So Jeff Hirsch, who's a friend of the space, we had to strike him. He took himself out of the lineup. Last minute pitching change. He lives in the New York City area, and he's trying to beat the storm out. So yesterday he calls me. He goes, George, I want to do it. Please give me a rain check. But he's going to a conference, going to the Money Show in Vegas. So he had to catch an 11 o'clock flight out this morning, and Peter graciously agreed to step in. So this is fabulous. We're also going to get right into it because Peter has limited time. Don't worry, we'll all you crazies will go on forever after Peter leaves. But I'm going to dispense with the usual foreplay and just get right into it, given that Peter has a hard stop. Peter, good to see you, my friend. How are you? Peter, please unmute yourself. Can't hear you, Peter. Tina, can you hear me, Tina?
Yes, George.
Hi,
Hold.
George. I'm here. Thanks for inviting me.
Hey, excellent, Peter. Excellent. Really glad you're here. Hey, Peter, before we get started, I'm just curious. I'm imagining you have some Dutch heritage in your in you.
Russian Polish.
Russian Polish. Okay, so and by the way, was there pressure to change the spelling of your name somewhere along the way? Because trust me, my real name is not. I was born not George Noble, so don't worry. But was Boockvar the real name, or has it been pressure to change it? Like, what's the deal with
No,
that?
that was the real name. The only complication is the C. It's a
Okay,
silent C, but it just it's confused people my whole life. But yeah, no pressure.
yeah.
Just that C gets in the way.
Cool, good. All right, let's get into it because I know you got a hard stop, and they're here to. I'll try to channel my inner Peter once you leave, but I want people to hear what you have to say. So I'm just going to trigger you to start off. A lot of moving parts. I think we're pretty similarly aligned in our views. I heard you on a couple of recent things. R is for rotation. I'm not calling for a big down market. I don't think you are either. But to me, it's incredibly clear what's going on right now. The first shall be last, and the last shall be first. Tech bro and software bro and crypto bro to kind of look at their navels and they're in a world of hurt. And then they get angry because they see the soundbite indices are in the 1 or 2% of their highs. Well, turn it around. The last few years we had the opposite. So if you're in the energy, in the miners, in gold, in some of the smaller caps, not all small caps, you're in foreign markets, you're in commodities, and emerging markets, you're doing great. It's great. I mean, this stuff is up like 30% year to date already. Year to date, bro, we're having a good time if we're in the right stuff. So to me, I'm not making a big market call. I'm making a big rotation call. I'm going to set the table for you, but that's my view. I have no idea what you're going to say, but have at it. The floor is yours.
Yeah, I think that was a good way to put it. I mean, I think 2025 was the beginning of the shift into other things, and people woke up and said, "Hey, there's not just seven stocks to buy. There's a lot of other things," and there were a couple of catalysts for that. Uh, the late January 2025 DeepSeek news certainly was one bell that rang. Then, of course, you had the whole trade war that began, and people started to say, "Hey." Maybe I should be diversifying some of my assets out of U.S. dollars, and that there's a whole world of opportunities out there outside of the U.S. Um, but I think it's now getting deeper because I think that there are a lot of bells ringing on the Gen AI trade. Not to say that it still doesn't work, but in terms of its dramatic outperformance, I think it's over. And those bells ringing are many. Yes, it was the DeepSeek news, but then the AI trade sort of caught a second wind in the back half of 2025. But to me, the first real bell outside of DeepSeek was the Oracle reaction after their September quarter, or I should say their July quarter reported in September when the stock spiked above 300 and then came straight down when people realized the huge amount of obligations they're committing themselves to, with a lot of it going to OpenAI. And then that was followed by their subsequent earnings release, and the stock fell even further. You had the Google TPU news, and people said, well, Nvidia may not be as dominant as we once thought. You had the Google Gemini news. People said, well, maybe OpenAI is not going to win, and that's when the trade started to sort of differentiate. Where when there's an exciting new thing, everyone wants to own every stock that's in a particular theme. And then, of course, you get to a point where people realize that not everyone can win, and those that are going
Peter, we
to,
blanked. Peter, Peter,
yeah,
Peter. Rewind 5 seconds. We lost you. Keep going.
yeah. Sorry, that not everyone can win, and the winners are going to win big time, and the losers are going to lose big time. You had Broadcom after they reported a good quarter, stock traded down. Even Nvidia reported a good quarter, stock traded down. Um, and all these different things are telling me that the dominance of this trade is sort of waning, and that all of a sudden you look at the free cash flow numbers of the hyperscalers, they're all rolling over big time. And if that's the case, and they're not asset light companies anymore, and they're all asset heavy now, well, that changes the whole dynamic. So while we can all still get excited about the technology, I think the infrastructure builders are now stretching the limits of the earnings growth that they can create, and that's why the market's sort of shifted its attention. Now, where this goes from here is going to be interesting because we've had the baton pass, obviously, to international markets, other big cap names outside of tech, and also small mid cap. I hope that can continue, but I also have to be realistic, and remembering 2000, 2001, where those type of stocks did great as tech crashed, but then tech crash brought down everything else in 2002. So I do think that we have to pay attention to where this trade goes from here, because we know the U.S. stock market and the U.S. economy is so highly dependent. You just look at the Q4 GDP number, and all of the capex gain came from information processing, R&D, intellectual property spending. And we all know that can be tied to AI and machinery spend and electrical equipment spend. And it's almost half of GDP growth is the data center construction. So everything sort of points to that. But I do think the bigger trends, and as you started this, international and small mid cap and non-tech big cap, they're going to outperform tech for the next couple of years.
Wow. Yeah. So that's we're reading from the same playbook, I think. So Peter. So just to pick up on the last thread there, this is not just a one and done. I mean, Jay Pulaski, who we've had on Spaces a lot, and he'll be the keynote speaker at our upcoming conference. He uses the Isaac Newton line, the ball that goes in motion stays in motion. So like this just got started. This just got started. People say, well, EM was up 33% last year. The SPY was only up 16. Dude, that comes after 10 years of cumulative underperformance. Okay. So I look at it. I know you look at charts, Peter, as you kind of a holistic approach to markets. And I think you have a valuation case. I think you have a fundamental driver case. I think you have a technical case. I think you have a positioning case. You have to deal with cards that Mr. Market hands to you. Okay, sometimes you always have to have a view, but they're your beliefs in your portfolio. Your conviction around your view may not be that high, but to me, on a scale of 1 to 10, what you just said is a 10. Like I am highly convicted that the place you don't want to be or U.S. dollar denominated centric assets, be it Mag 7, tech stocks, bonds, run, don't walk, and all that crap. I mean, essentially, the U.S. exceptionalism and all the trades associated with that sucked all the money out of the room, okay, and now the tide's receding, and not just for technical reasons, it's fundamental reasons. You've got a growth impulse in some of these other foreign markets. The commodities boom is benefiting some of these markets. You have a better relative fiscal and monetary setup in these markets. I mean, I could just go on and on and on. So, I really think, as someone said the other day, I can't remember who it was, for the next few years, I think this could be a career defining trade. Just like if one had been prescient enough, and I wasn't, to have bought Mag 7, 10 years ago, like that was a career defining trade. And what I love is the cognitive dissonance that most of the folks are experiencing. Peter, one area I want to go to right now is because I know we're kind of stretched for time. It's not just, oh, George, you think I should diversify into emerging markets or foreign stocks or gold or whatever. It's that the complacency. Think about this. Think about everyone's got their money, with RIAs and whatever, because they want to pick stocks. It's a loser's game. Which, by the way, we're going to get to in a minute as well. I think we're now into the age of golden age for active management. Exactly at a time when all the money is going from active to passive. Exactly at a time when every schmuck is like their RIA told him to put money into an index fund. Oh, it's only 5 basis points. Okay. Exactly at the time when, well, you have to have your 60/40 portfolio in bonds. I mean, like, run, don't walk from your bonds. Why you wouldn't just to start the conversation, that being Meshuggah, a technical term, and going short Tesla. Just a simple trade. Get out of your goddamn bonds and buy gold, okay? Or get out of your S&P and buy the RSP. I mean, you don't have to be a crazy here, all right? To me, the opportunities are so obvious. I could be wrong. Do your own work, but so I want people to focus on is not just, oh, Noble could be wrong. Yeah, Noble can be wrong. Won't be the first time. Won't be the last time. But I'm yelling this very loudly. All right. Do I trigger you, Peter? What say you?
No, I agree with everything you're saying, and to get more fundamental here with this too, uh, the big cap tech stocks. If you and I know the excitement that investors still have with them and this whole build out and this exciting technology, but Oracle told us that the gross margin of this new business they're developing is going to be like 30 to 35% versus their software gross margin of 70% plus. OpenAI, some of their um, financial statement data came out over the past couple of days, and they talked about the same low gross margin. So they're going to spend 50 to 75% of revenue on CapEx and generate gross margins of around 30%. So that's the fundamental backdrop for this entire trade is happening. And any student of history and markets know that the same stocks don't always win. And then you reach a point where there's a baton pass and there's another set of things that work. And that it's really hard to sustain a level of dominance in the market for more than 10-year timeframes. And only a few companies in history have been able to do that. And I think we're on the cusp of a tectonic shift in leadership. And it's not going to be these big cap tech stocks. Yes, it's still going to be exciting. Yes, we love this technology. Yes, it can be transformative in so many ways, but that doesn't mean that these stocks continue to work. And I think we are on the cusp of this major change. And anybody who thinks that the playbook of the last 10 years are going to work out just fine for the coming 10 years, I think is going to be sadly mistaken.
Peter, like the line from it was Sally Harry when they're in Katz's Deli. You had me at rotation. It's like, this is going to wind up being like a love. I couldn't agree with you more. Um, we got a lot of smart cookies in the house. Nobody special. It's not just tech's going to be a nothing burger from here. I actually believe you don't have to believe tech is a disaster from here. I do. Nothing. Nobody special does. But yeah, the other thing too, I'd like to make on that point about the rotation. I want to remind people you've got tech at whatever it is, max 7, 30, 35% of the index, whatever the number is. Energy, which is my favorite sector, is like 3%.
But
Oh,
George, it's even bigger than that because if you think about all the companies
yeah,
that are feeding into the Gen AI build out,
sure.
it's even greater whether you're making steel or concrete
Yep.
or HVAC systems. You get to almost half of the S&P is touching this data center build out.
I like to under promise and over deliver, but I'm not noted for, well, I am noted for that, but I also know for being hyperbolic. So thank you for upping the ante on me. I appreciate that. And then, so you start thinking at the margin, it's 50%. Fine. I stand corrected. Nvidia's like 6 or Apple's 5 or Microsoft is 5, whatever the numbers are, right? The entire energy sector is 3. 3. So just think about all it takes at the margins for 1 or 2% of the money to rotate out of that stuff. And Peter, you know how this works. It's FOMO. Flows follow performance. So you needed the train to have conclusively pulled out of the station, maybe to the point where you can barely see the train anymore before the folks start jumping on. And you're now starting to see that. But again, it's early days. It's early days. Louis Gav, who I know we're both fans of, we last saw each other at his lunch a month or two ago in Midtown. He points out that, and I didn't realize this, but he points out, he reminded me, It's not just that China outperformed the S&P in 25. It actually did it in 24. And I think it's going to do it again in 26. Then, God forbid, I say the public is, oh, you're a commie, you're a CCP page. So, no, I'm not. Just trying to make money. Just another schmuck trying to make money. Peter's just another schmuck trying to help people make money. We're trying to figure this out together. And so I think it's great. And the setup couldn't be better. The other thing I love about this, too, Peter, I know you know the line. How's it go? It's one of those Mark Twain lines. Um, it's not what you don't know that'll get you in trouble. It's what you think you know that ain't true. Okay. Everyone's so convicted on this US exceptionalism and tech trade and AI and yada, yada, yada. It's like the cognitive dissonance of trying to get them out of this trade. So I think this trade's got a long way to go. So, okay, so let's get to how we can help. What should investors do? So, Peter, for the normies in the room, not the crazies who are going to tell them to short stocks. Sorry, for the normies in the room that got their financial advisor, they got a 60/40 portfolio, blah blah blah. What would you tell them to do, Peter?
Well, what typically works for me over time is I just happen to be more attracted to things on the 52-week low list rather than chasing things on the 52-week high list. And now, of course, you don't want to get trapped in a bad situation. You don't want to be um, in a situation where that 52-week low gets even lower. But you look at energy, as you said, less than 3% of the S&P. Um, Coming into the year, I said that a barrel of oil at around $60 was one of the cheapest assets in the world. And I continue to believe that. I think energy stocks, generally speaking, if you and let's take commodities generally. If you can buy a company in a particular commodity space, whether it's energy, metals, ag, and or anything else, and you can buy a company that is producing revenue, earnings, and free cash flow in the bottom of a cycle or a price cycle. Just imagine of what you will make when the cycle turns. Now, I'm not smart enough to know when oil prices go back to 85, 95, or 100, but I'm pretty confident it's going to, and I got a multitude of reasons. But at $60, a lot of oil companies are profitable and generating nice dividends and free cash flow. And like I said, I have a multitude of fundamental reasons too, sentiment reasons. And to me, that's where I'm finding attraction. One of the other groups that I really loved coming into the year, not because these are exciting companies, they'll actually put you to sleep, not because there is fast
Wait
growth,
for it.
but
Wait for it. Wait for it. Here comes the consumer staples pitch. Go ahead.
yeah, it's exactly right. It's when a story gets from bad to less bad, and you have valuation support, you have dividend support, and you have a consistency in their business. It's a pretty attractive place to invest.
Yeah, Peter, let me interrupt you. Let me interrupt you because I love both ideas. But here's what I need help with. I need your help on this one. The energy one, we're gonna like have dueling bull stories. Consumer staples. I agree with everything you said. I agree relative valuation. I agree relative dividend yield, and I agree on it'll be beneficiaries of the rotation. I got that part. Okay. But here's what I don't understand because you probably watch the space more carefully than I do. Are the fundamentals actually getting any better?
So I follow the space closely. They definitely had a rough couple of years where after a few years of dramatically raising prices to offset their margin pressure. They lost the ability to continuously pass on price gains. At the same time, cost pressures continued, thus, their margins got squeezed, their volumes fell. That's why these stocks got killed. But I think we've reached a point where they are now beginning to trim prices to bring back the consumer. The whole well, let's take the food part first. The whole shift in diets, whether it's GLP driven, whether it's focused on protein, healthy eating, moving away from ultra processed foods, all these companies don't sit there and do nothing. They respond to what customers want. So there's been internally with a lot of these food companies a response to adjust to the new realities. At the same time, this has really mostly affected their US business. Talked about emerging markets, all these consumer food products are doing really well when it comes to emerging markets and either other areas have developed in Asia and Europe. So it was really sort of just getting their US business sort of more in line with the current realities, which I think a lot of them are. At the same time, you can buy some of these stocks like Kraft and Conagra at 9 or 10 times earnings with 6 5% dividend yields. On the product side, like a Kimberly Clark, for example, which got hammered because they announced a deal to buy Kenvue, and we can all debate whether that's going to be a good one or not. But when the stock was trading at 12 times earnings, yielding 5%, I was pretty confident that regardless of AI, people were still going to go to the bathroom and use toilet paper and blow their nose with Kleenex. And I do actually think that the Kenvue deal will actually work out just fine. We're long those stocks, but that's just an example of, these companies just don't sit around and let the market overwhelm them. They respond. But
Yep.
again, sometimes a really good investment is a tough situation becoming less tough.
Yep.
At the
Hundred
same
percent.
time, you have valuation support. That can be a winning formula,
Sure.
and we've seen that year to date.
But no, that's helpful because what I have in mind is when I have everyone chirping about the IWM, the Russell, I'm like, no. I get they're historically, cheap relative to the bigger market, but 40% of them lose money, blah, blah, blah. They're crappy companies. And actually, if you drill down on the Russell, Adam Parker's done great work on this. If you factor disaggregate the Russell, you'll find that Russell growth is very expensive. The only part of Russell which looks cheap is Russell value. So you really have to strip out the growth. You have to strip out the loss making companies. And so if you said to me, hey, George, you know what? I want to be involved in small mid cap companies, let's say profitable small mid cap companies with dividend yields and reasonable valuations, that I can get behind. But when people say, oh, rotate into this ETF, Peter, I know you know this. You have dirty ETFs. It's like, do you know, it's like those commercials. Do you know what's in your wallet? No. Do you know what's in your ETF? Right. So I get Russell's going up, outperforming the broader indices, but that's as much a function of rotation. In other words, people funded a lot of their Q longs with short Russell. Uh, but that's a rotate. It's pure rotation. There's no fundamental support. So that's why I challenged you when I said, talk to me about the consumer staples, because I really haven't done the work, to be honest with you. Now, if you say to me, hey, George, you know what? Fortress balance sheet, PE of 11, 5% yield, yada, yada, yada. Okay, maybe it's not get rich quick, but we know we're not going to get hurt. We know we're getting paid to wait. We know the rotation is going to come to us. That's fine. But that's different from saying, oh, you know what? Frito Lay just announced a new Twinkie or whatever the hell it is, and new product, and nobody special is telling me it's great, and it's the new, energy drink, and all of a sudden the earnings are going to go up a lot. You're not telling me that story. You're just saying it's cheap, it's rotation. The companies at the margin are adopting. What I worry about though is we're still in a a tough consumer environment. So you see so many industries where, the reason they're cutting prices, they have to. Okay, so the question is like, all right, I'll put it to you another way. Do you think we'll see earnings revisions on your favorite positive earnings revisions on your favorite consumer staple ideas over the next year?
Yeah, I do. I think so. Or I should say, at the minimum, uh, an end to the profit deceleration.
Okay.
Because all I need is profits from down 3 to 0, and that's a victory. And I think that that is what we're going to see. And also this is an attention thing. Tech has been the cool kids on the block for many, many years. And if you're not in that space, no matter what kind of news you had, it was really hard to get people's attention. And that's what you need. In order for a multiple to go from 10 times to 15 times, which is a 50% increase in the stock if we're able to do it, is a lot of times just making people care, right? When tech is working and nothing else is, no one cares about your growth rate. No one cares about your business if you're not in the exciting, sexy space.
Right.
So when the exciting, sexy space begins to falter, it forces people to start paying attention to other
Sure.
things, other
Sure.
kids whose grades are getting better, and that
Right.
maybe the parents are finally
Right.
beginning to pay attention to.
All right. So I know we got 5 minutes to go here because you have a hard stop. I have three things I want to discuss with you. So one, my good friend Zachary Marks, who's going to be appearing at our conference. By the way, this is hilarious. Zach is on a plane to Miami to go into some conference. He ran into Guy Adami on the plane, and Adami owes me. I'm supposed to appear on their show, and like we've been texting, but he doesn't give me an answer. So Zach runs into him on the plane, and he goes up to Guy. He's like, "How come you're not giving Jack? I know you're listening to this." He's like, "Guy, like, oh George, an answer. What's going on?" Anyway, Guy Adami is asleep in a row on the plane to Miami right now, like three rows behind Zach. So anyway, Zach
Funny.
writes. Zach from New Jersey writes. Peter, recently I've seen, I'm paraphrasing, recently I've seen some low end consumer names get nailed, So we want to talk about the victims here. Okay, low end consumer names get nailed. The EBT guys, right? Because the guys who rely, because Trump might be taking away the EBT stuff. It's going to hit some of these low end consumer stocks. What are the names around that, and what do you think of those names?
Wait, EBT meaning?
The EBT card you get like free drinks,
Oh,
free
like Snap.
yeah, like the Snap cards. Those
Yeah,
things. Yeah,
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 yeah, yeah.
yeah.
Well,
Who yeah, who gets nailed with that?
yeah, tell Zach to tell Guy I say hi. So yeah, that's part of the challenges. I'm not saying with the consumer staple stocks that there's an all clear here. There are challenges, but everyone knows about these challenges. And CAGNY was the conference, the Consumer Staples Conference in Florida last week, and they all talked about Snap. They all talked about it in the earnings calls. We all know this. So, but again, the companies that are catering to these customers, they've been challenged by slower, lower to middle income spending for the last year. So those challenges have been well reflected in these stocks.
Okay,
So again, I acknowledge
got
the
it.
revenue that
Got it. All
hit,
right, you
but
go. I got it. I got it. I
well
got it.
known.
I got okay. Two last things, and then you're dismissed. Energy rather than me suck it all there. Give me the elevator. I mean, I love energy. I could channel my inner Peter. But let's hear it from straight from the horse's mouth. Give us 60 seconds on why I like energy.
All right, a couple of things. Sentiment wise, net speculative long positions in crude oil, and according to the CFTC data, near 15-year lows. I hear all the time about the glut of oil, but outside of oil that's on the water on these tankers, I don't see the glut. You look at Cushing inventories near 10-year lows. US oil production, US shale has been 85, 90% of global incremental non OPEC supply over the last 10 years, all plateauing in a lot of these regions. OPEC, yes, they're continuously raising quotas, but production levels are not rising to the same extent, telling me there's barely any spare capacity left. Demand still pretty healthy, a million plus barrels a day. Venezuela, you won't see any real incremental increase for the next 5 to 10 years. Um, and more than half of US shale loses money north of, I'm sorry, south of below $55. There's a variety of factors that tells me my downside is extraordinarily limited in oil. And there are a variety of reasons that I just mentioned, and in addition to others that can see oil much higher in the coming years.
Awesome. Couldn't have said it better. But last question, we're going to move on because I know you got to get out of here quickly. And thank you again for doing this. Peter, before I ask the last question, what's the best way for people to follow you? Is it on X or you have a website, or how should people follow you?
So on the wealth management side, onepointbfg.com. On my writing, I write on Substack, a piece called the Book Report. I write every day on a variety of different macro and market stuff, and people can trial it out if they're interested.
And what do you do on the wealth management side?
I'm the CIO and I'm a portfolio manager on two strategies. And I help, in addition to that, help our advisors create allocations and portfolios for their clients.
Got it. Perfect. All right. Last thing, Bitcoin. What's your take on Bitcoin? I mean, if I had told you a year ago, forget about what your opinion was and mine was. If I told the average person in this room that gold's going to double, silver's going to triple, and risk assets to be big risk on, tech's up. So to the extent that Bitcoin's a risk asset or it's a liquidity play, all the drivers, all the fundamental drivers you'd want were in your favor. And yet it took a dirt nap. Why do you think that happened? And more importantly, what is your outlook for Bitcoin?
I think in the 16 years of Bitcoin's history, it's done tremendously well, and I credit those that have been bullish. Um, but it's been more correlated with tech and not gold. If Bitcoin wants to be digital gold, it should trade like gold, and until it does, it's not. And maybe one day it will be. And when it does, okay, well then you can make the same argument for gold. But until this, in the 16 years of its history, it's been more of a tech speculative trade rather than something that is equivalent to gold.
So, given your, how shall we say, I don't want to get too bearish here, but given that you don't expect tech to be leading the hit parade, if you knew just one thing and that's all you knew, the input is, let's say tech's flat. Forget about tech down. Let's just say tech's flat to down. That's the only input you had. What would that lead you to conclude about the outlook for Bitcoin going forward?
It'll be flat to down.
Okay,
Because
awesome.
that's what it's correlated to.
Yeah,
Maybe that
yeah,
changes one day. Maybe it does
yeah.
become
You know,
similar
you
to
know, you,
gold.
you know, Michael Howell is smart and all of us put together. He runs these. I'll send it to you when I'm offline. He's got these reports. He does these regression analyses, and it's a multi-factor thing. It's not just one thing. But sometimes it correlates to risk assets. Sometimes it correlates to liquidity. Sometimes it correlates to gold. It goes in and out. So, but all these variables are going on the right way. Yeah, things gone down. So, to me, there's information content on that. In that, I'm very negative on Bitcoin. I'll just trigger you with one thing. I think the decline in volatility is a huge negative for gold. I think the institutionalization of Bitcoin is a huge negative for Bitcoin. Um, it's funny. We were in a space a few weeks ago, and I was going on about why I don't like Bitcoin and gold and silver, and gold and silver got out over the skis a little bit because they became meme stocks, and all the crypto bro found SLV and GLD. Those are new meme stocks. So this kid comes on. He's like, "Oh, George, I really agree with you on gold and silver. I'm bullish on gold and silver." So I was like, "Okay, great. Made me feel good about myself." He goes, "But I totally disagree with you on Bitcoin." I'm like, "Why?" And he said to me, he had sold all his Bitcoin by gold and silver. So I hung him by his own petard. I said, wait, hold on, hold on. Why'd you sell your Bitcoin to buy gold and silver? He goes, well, because it wasn't moving enough. Not enough juice, not enough
Hmm.
action. Which leads to the bigger question. This will be the final question. When I look around now at the suite, and we're going to have Bitcoin Tina who's going to weigh in on this once you're done talking. The suite of possibilities that you're enabled, you can blow yourself up. By the way, boys and girls, I just want to let you know. You all know that I have a account. I also discovered DraftKings. I'm probably the last guy in America to do this. I also got MGM. And I have an opinion on this, by the way. FanDuel's the best one of them I found so far. I do want, if anyone has an opinion on the best sports betting space, please come up and tell me why I should get on FanDuel. All right. But I like them the best. But anyway, Peter, you have a choice of ways to blow yourself up. What needs Bitcoin? As I said the other day, I really triggered someone. I go, Bitcoin is like, it's like Facebook. It's for boomers. Like it's yesterday's story, right? We got SLV. We got ODTE, we got prediction markets, we got sports betting markets. Like, who needs Bitcoin? So I'm teasing you, but actually, this is a serious point. But what I'm saying, Bitcoin was like one of the ultimate degen plays, the way to express degen feelings. And now it's like it's rather home. And I think the institutionalization is a huge negative because before it wasn't tethered to anything, no pun intended. It was in its own orbit. Now that you got real money in this thing, it goes up too much, they sell it. It goes down too much, they buy it. It just sucks the volatility out of it. But this is before you get into, and this is for another space. This is not about quantum computing, but I'm sure you've been reading. I didn't want to go to this because it's going to trigger people, but I am totally convinced now Bitcoin by 2030 is out of business. Out of business. Okay, if you've been reading about security stuff and what AI is going to do, it's unfreaking believable. But don't even go there because I don't want that to be a shining object. I'm just saying right here, right now, given my dour outlook for tech, given that gold has failed to test, Bitcoin has failed to test digital gold, given you've got subdued volatility, given you've got fancier, hotter ways to blow yourself up, I just see no reason to own Bitcoin. And not to mention the fact that a lot of the older wallets that have been around for a long time, they're now selling. So what's the to Bitcoin here?
Well, it's funny, George, is us oldies got made fun of
Yep,
that we don't get it,
yep,
right? We don't get it.
yep,
It's the newest thing. It's going to
yep.
change the world. We just don't get it. And I always said, well, okay, I want to be respectful of Bitcoin. I don't want to downplay it, but something that's 13, 14, 15 years old is not replacing something that's 5,000 years old.
Bingo,
It's
ding,
just
ding,
not going to
ding.
happen.
Yep, 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 yep.
When you've been around for 5,000 years, you've been through a lot.
Yep,
When you've been around for 15 years, you're just a young kid.
yep.
Um, now, I want to believe, okay, Bitcoin has a use in terms of if I'm living in Venezuela and I don't have a bank account and I see the value of my bolivar falling 50% on a daily basis, yeah, I can see the fundamental use case if I need to accept money from my relatives in Miami, or maybe I need to send them money to Miami outside of the Venezuelan currency, and there are particular use cases. But whether Bitcoin is worth $1 or $1 million under that scenario, I have no idea, because it can still be a form of transactions for people that don't have access to the banking system. But telling me what it should be worth, I don't know. And I know it's not the only asset that has a finite supply. I know in 1968, Mickey Mantle also has finite supply. We can tokenize that. And why can't that be the next Bitcoin that actually has a fundamental real value that someone can touch, rather than something that's more digital? Again, I don't want to say that Bitcoin won't have a use at some point. Maybe it goes a lot higher. I have no idea, but that's the
Right.
point. If I have no idea of whether it should be a dollar or a million, then I can't own that. Can I
Sure.
use it? Yeah, maybe I use it if I
Yeah.
send money somewhere, but you
Yeah.
know,
And Peter, I'll trigger you with one last observation of Bitcoin. Could you imagine, Peter, if we were in a space here like we are now, and let's say you're recommending, I don't know, Kimberly Clark or one of these other, consumer staples that you like, or no, like Walmart. Let's take Walmart. It's a better example. It's expensive stock, or Costco. And we're in a space, and I'm going to pick on Bitcoin Tina because he's a friend. And Tina's like, "Ah, Walmart. Look at the chart. Ah, look at the relative performance. Ah." And there's a story. They're going to be opening up Walmarts in Cambodia and this and that, right? And Bitcoin Tina doesn't say a freaking word about evaluation, the earnings revisions, the book value, what's happening to same store sales, the business. All he's talking about is the price, the chart, and the narrative. Okay. I mean, Peter, have you ever been in a space where we're talking about a stock, us normies, us trade fi guys, and all we talk about is the chart and the story? Like you would run, not walk from that so quickly, it would make your head explode, right? But that is the way these kids roll. And the problem is that they've all done this and they've been right in the post COVID environment, even before that, and they think this is normal. This is not normal. So how have I triggered you? What's your pushback on that?
I agree. I mean, again, maybe we're just old school, and we like to um, find stories that are interesting and inexpensive, and yeah, I guess we're
Yeah.
just too old school for that.
All
Yeah,
right.
so I
Well,
agree.
so Peter, we're over the limit here. You've been fantastic. We got to do this more regularly because you have a really good way of tapping into the zeitgeist of the market and making complex or nebulous things simple. So let's do this. Promise me you'll come back, Peter, again soon. I know you
Yep,
got to go. All right.
absolutely. Yep, I
Excellent.
appreciate having
Excellent.
me, George. Take
Thanks so
care.
much. It's
All right,
fantastic. Thank you,
bye
Peter.
bye.
All right. Before we get Gordon up here, we have Gordon Johnson is in the house. The man. Gordon's going to be at our conference as well. By the way, I got to show for the conference a second, Tina, before I ask you to talk. So we're doing this conference on March 11. 15 speakers, the best of the buy side and independent research, each pitching an idea. No bullshit. It's about making money. No fireside chats. Oh, George, tell us what it was like growing up, the son of a Princeton math professor, blah, 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 blah. No, making money. This is like stock ideas conferences go to back in the day, usually only available to institutions that pay a lot of money. You'd sit around, go to one of these dinners, you got to come with an idea. And it was great. Everyone's a matter of pride. Everyone wants to put their best foot forward and is fantastic. So basically, what we're doing, I hate that term democratization. I hate it. The people that use that term, they're the kids with the caps on backwards that don't understand valuation. The financial illiterates. All right, you want real investors, the best of the best. This conference is. I mean, I wish I could have gone to a conference like this one back in the day when I was at Fidelity. And if I sound passionate and fired up, you bet your butt I am. This is going to be. We did this conference twice last year. It was a dry run. A huge success, artistically, intellectually, but I want to make it bigger. I want to have thousands of people at this conference. We have dropped the price to $99. We've already sold a few hundred of these things. $99. You will get to hear 15 of the best investors out there. Renaud Saleur, ex-Fidelity guy, killing it in energy. Tom Chanos, brother of Jim Chanos, had FreshPay as a short last year. Tom Thornton, everyone's friend, great technician. Adam Parker, former head of research at Morgan Stanley, former global equity strategist for Morgan Stanley. Don Durrett, goldstockdata.com. I need not say no more. Don has been out there with Tavi Costa in the vanguard of the guys who've been most right on gold. Not just being right on gold, but right for the right reasons. And by the way, we got Tavi as well. Gordon Johnson is going to be speaking in a minute or two, and Gordon can talk about the conference last year. Robert Mullen, I'm going to embarrass him. He's not allowed to because of SEC reasons. Talk about his performance. He's in San Fran, probably the most successful house manager you've never heard of, up over 100% last year. 100%. And I'm embarrassed to tell you what his returns are so far year to date. I was texting with Robert the other day. I was like, Shit, that's a good return for a year. Those are Madoff like returns. He said, no, if I was Madoff, I would spread it out over 12 months. He did it in 1 month. Zach Marks, Vineyard Capital, Vineyard Quant Capital. Van Drunkenmiller. Van is going to sober up for this session. Tavi Costa, up over 100 freaking percent last year. And by the way, it's not what this is. What have you done for me? I get that. I'm telling you right here, right now. I've been saying it. I'll say it again. You can't own enough gold. You can't own enough gold and silver and related stocks. If you want to know the names, you want to name names, listen to Tavi. Enrique Abeta, permanent alpha, year after year after year. He laid out the case for the NVIDIA short last year. He's coming back. Nobody special. It's going to tell you everything you need to know for your unnecessary purchases. I'm reliably informed. I don't want to be a spoiler and tell you what he's going to talk about. I don't actually know, but I think I know. Alberto Alvarez, the man. Oh, Jesus. His freaking platinum recommendation tripled from last year. Tripled. Plus, he had Sprott, which didn't do too shabbily. Motorhead. I told Motorhead I don't want you talking about Tesla because it's enough already. He promised me he's going to be a long idea. And then Jay Pulaski, keynote speaker, head of emerging markets at Morgan Stanley. Boys and girls, ladies and gentlemen, you will never, ever, ever find a conference as good as this. And I say that, and by the way, I'm not even going to talk. Me and my big mouth, you don't get to hear me. I'm going to do a summary at the end. I'm not pitching my ideas. Think about this. Imagine I'm promoting a concert and I'm able to go get to find the best musicians in the world anywhere, like all-star list of musicians. That would be the best concert in the history of the world. Well, that is what we're doing here. And it's for $99. Replay is available in 24 to 48 hours. This is better than any conference from any bulge bracket firm, Morgan Stanley, Goldman Sachs. Why? Because they're stuck with their legacy analysts and their conflicts of interest. I get to go pick the best of the best. I think I mentioned this example the other day, but I was on Julia LaRoche's podcast. She's down in Carolina. She's a UNC gal, and I said, Julia, think of it this way: UNC is pretty good at basketball, but say I get my team together. I say, Julia, we're going to destroy you. And she's like, why are you so sure? Well, my team is better than yours. How do you know that? Well, your UNC's good, but you got your lineup. Me, I get to pick an all-star team. I can go across the country and pick the best athletes. I think anyone would agree. Well, the odds are George is going to kill him that game. Well, that's what we're doing here. So $99. I mean, if you're not willing to spend $99, then you obviously have no disregard for your money. And if anyone doesn't like it, if anyone doesn't like what they hear, come back to me and tell me why you thought the conference was a waste of time, and I will refund your money. And lastly, this is not a one and done. I want to make this institution with your help. We're going to do this at least quarterly, maybe more frequently. You want to talk about democratizing finance, empowering people? Here you go. And I see my good friend Matt Tuttle is over there. So whether we get Matt to, we're going to come out with some new DGen ETFs. I met Matt for the first time a few weeks ago, and he didn't think there's anybody crazier than him. But don't worry, he met his match. So whether it's some new products or we're going to put Matt's name on this conference, he's going to help subsidize, promote it. I don't know, but whatever. Matt's a great guy, and he's going to help. And so by the way, right here, right now in the room, we got nobody special. He's going to be speaking. Well, I don't know how Gordon went, but you know what? I want to bring nobody in for a second here. So nobody, I'm inviting you to speak while we're waiting for you to come up. Tina, any thoughts, comments, or reactions about anything that's been said, either by Peter, me, or any just other observations about markets? I know you follow Bitcoin carefully, so what's on your mind, Tina? Please, the floor is yours.
I'm interested in looking for ideas in strong sectors that have been uh, that may be bottoming or inflecting, where there's some opportunities. I'm also extremely interested in international, and I'm trying to figure out ETFs to own. I subscribe to Jay Pulaski, and I'm extremely interested in international. I'm trying to figure out where I want to leg into and what I want to own. The international interests me an awful lot. I was a little concerned about what Peter said about 2000. What's it, 2002 to 3 or 1 to 2? I don't remember which year he said, and the impact that that had. And I'd also be interested in people's thoughts on whether or not the build out of the data centers, because so many of the stocks have been so incredibly strong, names like Fix, Comfort Systems, um, Sterling, STRL, these have been extremely strong names. Are these, going to continue pushing higher, or are they going to have sharp corrections? I don't know whether or not the hyperscalers will continue their spend. I think they're going to continue to spend for quite a while because I think it's actually it's existential for those businesses, and they will continue. And I think it's going to go on a very, very long time. And I think we'll actually produce a lot more than people think. But I will say this on the negative side: these were businesses that had massive free cash flow. With this capex spending, that free cash flow is no longer free cash flow. So
Ding ding
that's how
ding. No,
that's how
you,
that's how free cash flow works.
Tina, you nailed it. You nailed it. You nailed it. You nailed it. Well said. All right, so just hang there, Tina. Um, hopefully Matt will come up on stage, but let's go to Nobody Special. Always interesting. Always has a very perception. Brilliant. I urge everyone to listen to him on YouTube. He does thing every morning at 8 or whatever time it is. Plus, he does if you subscribe, he does a Friday afternoon Zoom call, which is fabulous. And he's always got a very perception, and a lot of things we've been discussing here are top of mind. And nobody is going to be speaking. And by the way, to remind everybody, nobody let me pump you. You can't pump yourself. It's better if I pump you. Um, if everyone goes back to harken back to last fall when Nvidia, there was the whole hullabaloo over Nvidia's. Nvidia had the quarter, but then people called out the rise in the receivables and the inventory, and some AI guy figured this out. Some AI thing figured out what the street couldn't figure out. Bullshit, bullshit. That was nobody special. And then some guys stole it and ran with it, but we got the receipts to prove it. Nobody special also is very special. He's worked for utility, knows about nuclear. So if we want to talk about AI, nuclear, anything that's electrical, like he's a guy as opposed to yours truly who doesn't know anything about this stuff, just play. So nobody, how are you triggered today? Welcome.
I'm doing good. Thank you, George. And I think I was listening on a 2 or 3 minute delay before, which is why I missed you when you put me on the spot. I apologize for that.
No worries. So have at it. What's top of mind for you?
So it's along the line of what was just being discussed about data centers and the endless capex and will it continue or won't it? There was a story that came out late Friday morning. Well, Friday morning came out, and I think it was the biggest story in the world, and it got buried because it involved Blue Owl. But this was like the fifth Blue Owl story of the week, and maybe we got a little bit of Blue Canary fatigue this week. But Blue Owl was shopping around debt to get a data center built for CoreWeave right here in my backyard in Chester County, Pennsylvania, and they couldn't find anybody to finance this project. And the quote that was in the article in Business Insider was, "We saw, we passed." And so Blue Owl pulled out of this project. And that raises the question, just how big a pile of flaming excrement must your balance sheet be for freaking Blue Owl to tell you no? That's what happened to CoreWeave this week. And so this is the first time we've seen this where a data center project doesn't automatically get billions of dollars thrown at it. So we are finally, maybe it's early, but this is the first instance of no capital being available to finance this build out. And it's starting where it should start in the lower tiers, the neo clouds, which are, I know this is your favorite quote, George, it is, "We work with GPUs." Got to give Ed Zitron credit. He's the first one who said that. But that was a huge story. It happened on Friday, and everybody was still busy talking about Blue Owl gating their business development company. And so it kind of got lost in all that other news. But I think that was a massive story. CoreWeave stock reacted to it, but nothing else did. I think NVIDIA stock should have reacted to it. And I think the hyperscaler stock should have reacted to that also, but they didn't.
So nobody. By the way, nobody. You like being called nobody? You like being called Jack? What's your preferred salutation?
I've been called much worse than either. So whatever makes you comfortable, George.
So we're both. I mean, I'm a sort of Philly area. I'm gonna say yo. Okay, I'm not gonna go yo Anthony. Okay, but say Jack. Does Jack know Jack? I bet you've been teased on that too. Okay, so I'm gonna call you Jack from now because Jack does know Jack. Just like nobody special is special. So Jack, to me, this AI thing, whether it just grossly underperforms or it crashes, I happen to think it's going to crash, but neither here nor there. But for the average folks in the room that either own tech stocks or Qs, or for that matter, SPY, which is so tech heavy, what would you tell them, Jack?
I would tell them focus on the profit, and in which case they may struggle with that because there isn't any. AI does not make money, has never made money, and is not projected to make money anytime soon, if ever. All right. Now that's why they always talk about their revenue, their annual revenue. Our revenue run rate is up. They talk about how much money is coming in. They never mention, oh, twice as much is going out. And that's why that news with Blue Owl is so important, because when you got more going out than coming in, you need new capital to continue to live. And that didn't happen for CoreWeave this week. And also, there was a lot of talk back in January about how Sam Altman was in the Middle East and he was going to come back with $50 billion of money from all these oil sheiks, which, there's some certain cultural incompatibilities between Sam Altman and the oil sheiks over in the Middle East. We don't need to get into that. Maybe that wasn't the best person to send over there. But
by the way, Jackie, let me do this. I want to be very careful how I say this. So I'm a very liberal-minded person, even though I'm not a libtard. But could I also? But so I have license to say or ask this because I happen to be Jewish. So I know you were kind of like alluding to, if I can use that term so lightly, alluding to his ethnicity, his religion. Is there also something about his, how shall we say, sexual preferences, which may not have made him the best guy to send over there?
both.
So
Look, I mean,
you got a twofer here. Okay, keep going.
you have to know your audience. You have to know your room, right? And he's starting with two strikes against him, ultimately, right? And strike three, my business burns cash like no other. That was never.
You're hurting me, man. You're hurting me. This is hilarious.
So he came back empty-handed. Now, these articles were all front page news in the financial press in January that he was going over there and he was going to come back with it. And he came back empty-handed. And instead, the article, the big story was OpenAI's next funding round is going to be up to $100 billion. And, according, of course, anonymously sourced, as always. And who were the usual suspects? It was Nvidia. Nvidia is going to invest 20 to 30 billion dollars. Well, that's down from the 100 billion that they were going to invest just a few months ago. And again, that downgrade from 100 to 30 billion didn't get nearly as much airtime as the initial $100 billion commitment. And man, you want to watch somebody squirm like a slug in salt. Watch Jensen Huang in those interviews when he gets put on the spot about the $100 billion commitment and how he tries to word salad his way out of it. Uh, you're already starting to see the capital dry up in this space. All right. And you're talking about a space that is hopelessly dependent on an endless supply of new money to burn, and the valve is starting to close. So, how long is it going to take for that to show up in some big AI company going belly up? Or how long is that going to take until a hyperscaler announces they're going to cut their capex? I couldn't tell you that. But I will tell you one other thing. Every hyperscaler, the big four, Meta, Microsoft, Google, and Amazon, every one of them dramatically increased their capex in their last earnings calls, and every one of their stocks dropped. For every dollar of capex that they announced for 2026, their stocks dropped by $2.
So you just touched on a really important point, which I discussed previously in this space, and I'm going to see if I can put up. I think I did, but I'm gonna. If I didn't, I will. In my Substack. By the way, commercial message, if I may. Sorry, I don't be obnoxious. I'm trying to help you guys. All right, it's education. I mean, if I want to make money, I charge a lot more than $90 for the conference. Okay, if I want to make money, like I charge a lot more for my Substack than I am. You can go back and look. The last 6 weeks I've been writing on this free. We just put up the paywall. It's part of the offering for the paid. We're including highly exclusive paywalled research from other guys like Louis Gove, Michael Howell, John Roque. I mean, just go down the list. This is all stuff which costs, $25, $30, $40,000 to get. And I'm not going to give you all their stuff because you gotta respect their existing client base. But when there's a particularly good report out, I will share it. I only share it with their approval. And so this to me, this is crazy. You get access to, and it's only because these are good guys that they're willing to share. You get access to these types of guys for like, $45 a month. Are you freaking serious? And I go through this stuff and I pick out only what I can't get out everything, but I pick out what's the most important, right? So, for instance, on February 7, we all worry about liquidity. Michael Howell has a Substack. He also has an institutional product. I sent out his institute. It's free. Go look at it right now. It's in my Substack, February 7. I sent out the report with his approval that went to his $40,000 a year clients. On February 5, I put out a chart from John Roque. I'm trying to find the Louis Gov one. It was about reflation. Okay, here we go. So on January 27, if you go back and look, it was from his daily, Gavkale Daily, a new reflationary force entitled, If It Looks Like a Duck, Walks Like a Duck, Quacks Like a Duck. Anyway, he explains the whole global case for reflation in a way only he can. So I'm bringing this back to what you were just saying a second ago, Jack. He wrote a piece a week or two ago. In fact, I'm going to ask him for permission to put it up, where he made exactly the point that you're making. I'll share it with you later. Where in a bull market, companies are rewarded for ever increasing amounts of spending. So, Charlie Munger, please call your office. I know you're 6 feet under, but nevertheless, we're thinking of you. Show me the incentive. I'll show you the outcome. So, if companies keep spending more and the stock price keeps going up, of course you're going to keep spending more. But you eventually get to the point where the market doesn't reward you anymore. And Jack, you were just saying it earlier, going back to the October Oracle debacle. I think that's when we crossed the Rubicon. And Jack, it doesn't really matter what you think. It doesn't matter what I think. It's what the market thinks. And the market will tell you. So I could say Nvidia is overvalued, and I was way too early on that call. Whatever, fine. I make mistakes. Yeah, okay, haters, come at me, bring it. But you're perfect. It's okay. So don't get caught up in your own bullshit. That's a key lesson here. As my friend Stavros always says, it'll show itself. The market will tell you. So when you see Oracle, go in fuego, and then it's lower now than it was prior to that announcement, and you see all these hyperscalers, despite all the growth announcements, the stocks keep going down. The market, that's the Mr. Market's way of telling you that no, it's too much. It's too much. And so you'll know. You'll know. You don't have to be wed to your own narrative. You will know. The market will tell you. And so what I really like about your call, Jack, is, it's very appealing to the ego to be, oh, I'm the guy who called. No. That's a blow odds trade. What I love is Mr. Market's weighing in every day, telling you you're right. As Stan Weinstein famously used to say, it's not the news, but the reaction to the news that counts. And the market's telling you are right. So I think the burden of proof has shifted from the bulls, has shifted from the bears to the bulls. Whereas before, I might say, oh, it's expensive, yada yada yada, trees are growing in the sky. But every time there's a fakakta announcement, technical Yiddish term for crazy announcement, if you get more spending, the stock will go up. Now, not so much. And I think you're right. And I think the market will let us know. And if markets get rewarded, if market rewards companies for cutting back, then they'll cut back more. So what part of that, Jack, do you agree with, disagree with, whatever? Have at it, Jack.
I agree wholeheartedly, and again, that I think you kind of undersold the move in Oracle there, right? When Oracle announced their, what was the number, $100 billion or something in remaining performance obligations, which is a completely BS statistic. It's spending commitments from companies that don't have the money to spend. The stock went to about $330. It's 148 now. It's down 55% from the high it made back in September. All right, this is not a token amount. It didn't drop 3 or 4% on the announcement. This thing was cut in half. And this was shortly after this that I went short Nvidia. By the way, it's done nothing but trade sideways ever since. The one thing I would question with the whole narrative that you just said, and I do believe eventually this market will begin to reward people for not spending this much money on these data centers. But there's one thing to think about, and I've used the analogy of a game of chicken with two cars steaming at each other, and whoever swerves first
Yeah,
loses.
bring it, man. I love this
Right?
one. Bring it.
The hyperscalers are trapped in a game of CapEx chicken right now. They are all in a contest to see who can burn as much of their own money as possible, and whoever stops first loses. But we're at the problem now where the cars are close enough where if they don't stop, they also lose. So I'm not entirely convinced the market will reward them if they stop burning this money in CapEx. The market will continue to punish them if they don't. But the second one of them blinks, they are all going to get punished immensely. And so they're really trapped here. There is no out. They got to take their medicine,
All
and
right.
they're just delaying
All
it.
right. All right. Jack, totally agree with you. I was trying to understate it because I'm.
Can I ask
Yeah,
Jack
yeah,
a quick
Tina,
question?
wait. By the way, but hold on, Tina. Dougie, get away from the golf club course for a second. Get your butt in here. I said, Doug Cass, I'm talking to you.
Can you ask him to unblock me,
Who?
please?
Who?
Doug
Yeah,
Cass.
yeah,
Doug
I
Cass.
will. Cass, unblock Tina. All right. So, Cass, you got to get up here. All right. So, all right. So, go ahead. So, Tina, did you want to say something before Jack keeps going?
Yeah, just a quick question. I want to understand because so there's likely revenue being spent from the hyperscalers, but then there are more, I'll call them periphery types of players like the neoclouds, like the CoreWeaves of the world, who are spending on the CapEx. So the first question is, and sort of a two-parter, what do you estimate, I don't know if you've done this work, what do you estimate is the spend coming out of the hyperscalers who won't have a problem borrowing and who have massive cash flow? And what's the spend coming from periphery? And how is that going to impact? You have a lot of stocks that are very strong, making new highs. And I'm just going to go to the IBD 50, and you have stocks on here which are like that, which includes names that I mentioned before, Comfort Systems, which is Fix, even FTAI, which is a turbine play for data centers. Um, what else?
So,
There's a bunch of them.
Tina, hold on.
So how will it affect those companies?
Hold. I love the question, but just hold it for a second. I want to contextualize the question, okay? And I want nobody special to answer. You're talking about like the more marginal derivative plays, all right? Those things are sort of high beta plays. They orbit around the same sun, which is the AI narrative, all right? That's the high beta garbage. So once that stuff starts going down, I think even nuclear. I wanted to ask about nuclear. I mean, nuclear, like it or not, has been kind of highly correlated with identified as an AI derivative play, right? So the stuff you're talking about is going to get absolutely obliterated. As a matter of fact, the neoclouds, let's talk about the neoclouds, okay? Those things are actually far more better shorts, more attractive shorts. Sorry, Howard Cosell, for the bad English. Far better shorts than NVIDIA, because those things, as nobody special was saying, they're just WeWorks with GPUs. So all the rubbish you're talking about, Bitcoin, Tina, it's sort of like the solar system, but they're like the little planets out on the edge. So nobody special. Have at it. Speak to. You can say it more articulately than I can, but these sort of derivative plays and the neo clouds and like what's going to happen to them when this whole thing goes down.
So I agree. The neoclouds are the low hanging fruit of this dying tree. Uh, when you said, try to carve out the neoclouds, how much of, say, NVIDIA's revenue is neoclouds versus big tech? I would make the analogy to Clark Griswold and his Christmas lights. I don't know if you saw on Christmas Vacation, Clark pulls on one strand of lights and the whole box comes out in one giant tangled ball, because there is no way of telling whose CapEx is going to CoreWeave, going to Nebius, how much of CoreWeave's CapEx is going through their data centers. They all have co-location agreements. Microsoft is spending at CoreWeave. Amazon is spending at Nebius. I don't know if their operating expenses are being claimed as CapEx for the sake of messing with their books. The auditors are totally asleep here. They're only now beginning to poke around. We had Meta's auditor, Ernst & Young, raise questions about their off-balance sheet financing with Blue Owl about 2 weeks ago. So I think it's impossible without a scalpel and a magnifying glass to really tell how much of all of this cash burn is coming from the neo clouds versus the hyperscaler. I think it's all mixed up in the same pot. And so I think the big break here is when one hyperscaler announces the capex cut. A neo cloud going bankrupt will be big news, and I think it's inevitable. I do agree that it's an easy short. I would throw the one asterisk on shorting neo clouds here. I think it's entirely plausible because of how intertwined the finances are, that NVIDIA just defensively buys the neo clouds before allowing the
Right,
headline risk of letting
right,
them go
right.
bankrupt.
No, that's well said. And before we go to Matt, Matt, you're in the on deck circle. Just a word on nuclear. I know you're long term positive, but could you speak to the mismatch between the timing of when this stuff can be meaningful versus versus a timeline of folks that are pushing the narratives, and then also, fortunately or unfortunately, I mean, if the AI trade gets blown up, I think the nuclear players are all going to get hit as well. So have it any of that or all of that.
Was that directed at me, George? I'm
Yes,
sorry.
Well,
yes, sir.
can I say something before Matt talks?
Yeah, quickly, Tina, quickly.
So I got an email from Matt because I subscribed to it, and he explained how Europe wants to, is concerned about their own sovereignty,
Yeah,
and so
Tina, hold
that
it.
was
No,
I
Tina,
no, I
Tina,
just
no,
want to.
Tina, stop,
Yeah, I'm
stop.
sorry.
I got an order to this. Matt's coming in 1 second. We'll engage that. I just want to
Oh,
finish.
okay,
I
sorry.
want to finish this strand. So nobody talk about, um, talk about the nuclear space, and it's like it's going to be later rather than sooner. But the narrative is all it's going to happen tomorrow, and blah blah blah. And what do you do with the nuclear stocks? And do you think they'll get hit when the bloom falls off the rose on the AI trade?
Absolutely. Absolutely, they get hit. One of the biggest nuclear operators in the country, my former employer, Constellation Energy, which I don't own any stock in that company. They're trading at a 33 PE right now. So the utilities are
Whoa,
trading.
whoa, 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 whoa. It's a freaking utility on 33 times earnings. Can you say that again for the audience,
Yeah,
please?
yeah, public utility trading at 33 times earnings. All right,
Yeah,
and
yeah, nothing to see here. Just move along. Keep going. Yeah, okay, go ahead. Go ahead.
and look, the reason for that is the laws of physics get a vote. They're building all this stuff that requires immense amounts of power, and everybody is assuming power prices are going to go vertical, and they have already begun to. All right, put a pin in that vertical power prices. We'll be back to that in a second. But there is a massive duration mismatch here in play between the promises of when this new power is going to arrive and when the demand for it is going to arrive. The demand is already starting to arrive. The power will not get here for years. The nuclear, I mean, look, they've done some things like the restart of 3 Mile Island, which is progressing. I mean, they've already picked that. But the build out of new reactors, no effing way, no chance. This 2030, 2040, maybe. I mean, it's just the power will not get here in time. Even if they don't go nuclear, if they go natural gas, the waiting line for these turbines and for the large transformers to connect them to the grid is 5 to 7 years long now. The power will not be here in time to power these things. And then the pin that I put in that power prices in just the last week, we had data center projects canceled in San Marcos, Texas, which is, Texas State University is in San Marcos. It's a purple political area, right? It's red Texas, but a college town. Then you had a data center got canceled in New Brunswick, New Jersey because of political opposition, right? That is bluer than blue, Rutgers University in New Brunswick. And then you have massive opposition to this big data center they're trying to build in Mercer County, Kentucky, which is redder than red. All across the political spectrum is a contest to see who can be more opposed to these data centers heading into the midterms later this year. Data center will be a 4-letter word by October because of what it's doing to power prices. And power prices are going up because the laws of physics don't care what Sam Altman says at a TED talk or
Yeah.
what Jensen
So,
Huang.
so Jack, let me ask you a question. I got to find you can find it if you don't know it. You'll see it. Man, and again, this is why, I rely on you. So I saw this blurb it was last night. Did you see this thing on X about how it's alphabet soup with all it was the Blackwell or whatever the hell it was. The price it said something like the price of chips on eBay went from like I don't know $40,000 to $6,000, and you got like hundreds of thousands, millions of these chips sitting around and blah blah blah. So basically, we know all these chips have gotten stacked up. These bogus fake accounting sales that Nvidia engages in, and they do it in a way where they're obligated to take it back, but it doesn't show up on. You can still look at his revenue, yada yada yada. But did I see something correctly, if I'm wrong, about some of the Nvidia chip prices just collapsing in the secondary market?
Yeah, these were Hopper chips. I saw the post. I didn't scrutinize the specifics of the pricing and, was it damaged or anything like that. But let's say hypothetically for a second that everything was accurate and it's a legit H100 or H200 Hopper chip. It gone from 40,000 to 6,000. We're now, let's say this is a 3-year-old chip, right? The Hoppers were the big top of the line one in 2023. All of these neoclouds and these hyperscalers in their depreciation schedules are claiming a straight line 6-year depreciation cycle. All right, so that 40,000 should only be down to what, the mid 20s right now, or the high 20s, based on that depreciation cycle. That's at 6. And so I'm channeling Dr. Burry a little bit here because GPU depreciation is the meat and
Yeah.
potatoes of his
So
short.
so yeah. So it's the old mark to model. So you're telling me, Jack, huh? The old mark.
I'm telling
Yeah.
All of it.
Yeah,
Their depreciation schedule is bullshit.
totally.
George, pardon my.
By the way, so I'm going to digress for 1 second, and then we're going to go to Matt. Matt's been patiently waiting. Apropos of that, I was in a meeting the other day with some guys on a real estate deal, and it's a long story. It's not about their deal. We're talking about generating some Freddie Mac paper, 10%, blah blah blah. And, me, I'm always like, I'm pissing in the pool. Like, how can this go wrong? It's a scam. It's private credit. Okay, fine, whatever. It's not the point. Here's the point. So everyone's talking about, everyone's got all these models, and this is shades of 2007. It's all about housing. And we know, so you look at some of these deals, you can make 10, 12%, it's like mezz financing. And you look at the assumptions, and in the assumptions, Jack, you're gonna love this. They're modeling only a 3% rent increase for the next few years, right? 3%. Hey, what's not a lot, right? 3%, right? Does not number go up 35% crypto style return? 3% rate, 3%. Sounds good, right? You're gonna love this one, Jack. You know where this is going. Well, it turns out the pieces of property they're using to generate these returns, they're all Sunbelt like stuff. So unlike what you're seeing in Westchester County, where there's no supply, or where Cass is in Palm Beach because it lives in the higher rent district, it's all this sort of normie stuff. It's in Nashville, it's in Atlanta, it's in Austin, whatever. And because there's been such a huge supply response, you ready for this, Jack? Yeah, I'll give you 3%, all right, but it ain't 3% up; it's 3% down. Like, whoa, whoa, whoa. Hold on, hold on, hold on. Now, they might not sound like a big delta, but when you got a big leverage product and you've got projections rolling out, and all of a sudden it's rents down 3 instead of up 3. I didn't say down 30. I said down 3. And then you crunch the numbers, all of a sudden the thing goes upside down. And it's like, well, rents have never done that before. Well, it's not true, they have. Well, we've never had a situation where the population's gone down. We've had net negative immigration. Just like, Ben Bernanke, call your office. Housing prices never go down on a national basis. So we're looking at this thing. And this private credit garbage is being generated on the assumption of rents 3% up. And by the way, this is not a prediction. It's already happening. It's already happening. This private credit stuff, what is it? Jack, what is it? GTFO? I don't want to swear, it's a family show. This private credit stuff, anyone who owns this stuff, and they had this idiot, Doug, I want you to come on. Please talk, Doug. Please. They had this know-nothing moron on the Cartoon Network the other day. Doug went after them in a huge way. This nice woman, I'm sure she's fun on a date, but they were asking her questions about private credit. She couldn't answer the first question. I went last summer. I'm sure we've all been solicited. I went for the free food. I attended this last week. I'll say it again. It's a great story. This guy from Oppenheimer, one of these firms, was after me. Whoa, private credit, private credit. So I've been all over this. Sharply critical of the Yale endowment because I'm close to them. All the Ivy League guys are going to get what they deserve. They're going to go tits up. At any rate, so I go to this lunch. I promised not to piss in the pool. I behaved. I wanted to hear the pitch. So they put up this 15-year thing of private credit. It was Ares was the ones doing it. And it shows the S&P, and then it shows their performance line. And they actually outperform the S&P with much lower volatility. What's not to like here? Yeah, sign me up. How much? George, please don't ask me for more than 10 million because we couldn't accommodate you. Okay. So I wait patiently. Wouldn't want to piss in the pool. It was a good steak. It was a good Midtown steakhouse. What the hell? I wouldn't go there myself. So I do my Columbo shtick. Dougie, get in here. I do my Columbo shtick. I'm talking to you, Cass. Get in here. I do my Columbo shtick. I'm like, so explain this to me. You're lending money out to the clients as private credit shit at like 9%. But you're returning like, I don't know, 11 to the investor. Like, how are you doing this? Dougie, hold on. I'm going to get to you in a second. We're actually going to let Matt, you're going to have to wait because this is where we're going to set up Cass. And I'm like, how do you do this? I'm playing dumb. Well, we lever the portfolio. What? Yeah, we lever it. We're getting whatever, 9 and times 2, and then we take out our fees. And, wait, you lever the portfolio? I missed that part. Anyway, this thing is a flaming pile. Jack, you got to stop me because I want to keep this a family show. I don't know what the right terminology is. Flaming pile of excrement. Run, do not anyone that mentions private credit, GTFO. Maybe that should be the new calling card of these spaces, GTFO. So, Jack, am I being unfair to the private credit guys?
No, sir. And I think I know the interview you're talking about on CNBC.
Yeah.
Let me just point by point go through some of what she said.
Yeah, and her name, by the way,
Um,
you're too nice a guy. Oh man, is her name like Blake Tarkington or something like that? I forget
I,
her name.
I,
Something
I
like
don't
that.
remember the name. I was listening to it on an
All
audio
right,
podcast.
okay, go. Since Cass, I don't think Cass is doing the bob and weave. I think he's having technical issues. But if you can get in here and stay in your Doug, if you can get back up on stage, I'll put you. I'll interrupt anybody to let you talk. Please come back. Go ahead. Nobody.
So first of all, that $1.4 billion loan sale that Blue Owl made this week, and they're saying, hey, this is proof of liquidity, right? Look, we sold these loans for 99.7% of par. All right. Well, first of all, the first 10 rich people getting into a lifeboat on the Titanic did not prove there was enough lifeboats for everybody. All right.
Do
And
you
the
write your own copy? That's
I do. I
brilliant.
do all my own stunts.
All right,
Yeah.
go on. Keep going. Go on.
And then, to carry forward that analogy, all the poor people got locked below decks. And that was Blue Owl gating their redemptions, permanently gating their redemptions. And then so all right, this lady's claiming this $1.4 billion is proof that there's no problem here. All right. Well, who did they sell it to? Number one, pension funds. They always dump it in pensions. But number two, it was their own freaking insurance company that bought these loans. So they sold it from their right pocket to their left pocket. And they said, see, it's worth what we say it's worth. All they did was transfer the risk from their OBDC2 fund to their insurance company. So if you've got an annuity with their insurance company, good luck to you. On top of that, that chart that you're talking about where they say, look, we've outperformed the S&P 500 without the volatility. Yeah, that's using their marks. All right. These are illiquid assets that are not publicly traded. So the performance over the S&P 500 they're claiming is just a number that they pull out of thin air. And Blue Owl just showed us with their gating of redemptions that it's not worth that. All right. So again, these charts showing private credit has outperformed anything that is marked to myth. That is not marked to market. And the other thing to keep an eye on is this story broke on Friday also. Saba Capital just submitted a tender offer for all the people who got trapped in this OBDC2 fund. They're offering 65 cents on the dollar for their shares. That's interesting. Let's see who takes that because Saba obviously thinks it's worth more than 65 cents on the dollar. But anybody who takes that tender obviously says it's nowhere near par. So I'm curious to see how that one plays out.
Yep.
And last but not least, these returns that they're claiming. And this lady was on CNBC claiming, oh, they make 9 or 10% returns annually. Go buy a treasury if you can't take the risk.
Yep.
What she's not saying, and what Fitch has already beaten Blue Owl over the head with, is most of those returns is PIK, payment in kind. Because these companies that these loans are made to don't cash flow, they can't cover their debt service. So all they're doing is growing the principal. They're making the IOU bigger, and they're reporting that as gains in the fund. It's marked to myth. That's
Just all right. I'm taking a breath. We're gonna go to Matt in 1 second. Jack, that was masterful. Tina, that was masterful. I just want to say, we all have a love-hate relationship with this app. Leave personal opinions about Elon Musk aside. Let's just talk about the app. I have a love-hate relationship with this app. I think they've ruined it. However, it's the only platform I know where we can have this type of interaction. I think, Substack Live, YouTube Live, it's all chat stuff. But this type of interaction is magical. And despite how much I hate this app, hate it. There's one thing it's good for, and that's this. And these spaces are magical because of all of you. Just think about this for a second. It's not me. Just think about all the people that are coming through here. We started off with Peter Boockvar. Tina weighed in. I'm running my big mouth. You're about to hear from Matt Tuttle. Maybe Cass will show up. I don't know where Gordon went. This is magical. We're back. This is 2022 all over again, despite how screwed up this app is. But the success of this app, these spaces, only depends upon you guys. So I want to thank each and every one of you. All right, so just hold it right there. So Matt Tuttle, Matt, you've been waiting. I'm sure there's a lot on your mind. I don't know where you want to start with all this. Maybe start with Tina's thing about European defense because you've got a great ETF to that. So maybe start with that first.
No, it wasn't European defense. It was the
Yeah,
software. It
yeah,
was
digital sovereignty.
European governments shifting their spend. That was the big deal, and what's hitting software companies, and that's what I read in Matt's piece from
Yeah, all
Friday.
right.
That was
So
really
Matt, why don't you answer Tina?
Yeah, yeah. Can you hear me?
We're good.
All right, cool. Before I do that, I'll just push back on one thing as far as me having met my match and you may be forgetting I launched a UFO disclosure ETF 10 days before
Oh
Obama
yeah.
said
Wait.
aliens
You
are
are the
real.
king. You are the OG. You have not lost your touch. Just when
All
you
right.
thought he couldn't be, I know it's a point of honor. Just when you thought Tuttle had done himself, wait in this. And I want to let you know, Matt. I'm in a couple of these chats. They're going. You still got a market. They love you, man. So keep doing what you're doing.
All right. So yeah, one of the big things besides UFO disclosure, which I think is an amazing theme, we're looking at is a lot of kind of ancillary things around AI, and so European digital sovereignty. You're seeing European countries now, they're kind of caught in the middle. Like we're in this big AI race with us and China. And, historically in Europe, if you wanted to, do anything, you'd have to use a US company. And you're seeing more and more, just like you saw with European aerospace and defense, which, we nailed. And I don't think this is going to be as powerful as that. I mean, that you had like Trump, you had all sorts of cool stuff. I think you're going to see more and more European countries trying to bring this stuff in house. And, and obviously, you don't have Nvidia in Europe, you don't have Microsoft in Europe, you don't have Google in Europe, but there are companies. We've been doing a lot of work on this. Maybe an ETF filing coming out fairly soon on this. I think it's a theme that you definitely want to be in. Along with the European aerospace and defense, and and along those lines, I agree with you 100%. This is a stock picker's market. If you want Europe exposure, you don't just go buy a Europe ETF. My guess is most of them are just chock full of banks. You want still exposure to what are the themes in Europe that are going to be the great themes. I think it's obviously aerospace and defense, and I think it's digital sovereignty.
And by the way, just to put a commercial message in. So since Matt and I are new besties, I guarantee Matt's never at a loss for creative ideas, but I think it's really dangerous now that we're kind of befriended each other, and now it's like God only knows where this is going to go. So,
It could get interesting if you put my brain and your brain together and
yeah,
we do
yeah,
an
no, for sure, for
ETF.
sure, for sure. You know what? I've proven I know how to run an ETF, so I'm gonna encourage everyone or relieve everyone. My hands are not going to be on the fingerprints, but
And we would not let that happen.
no,
I mean,
I know. But I'm going to
we've
give you the
got like
idea.
68 ETFs, so
Yeah,
we'll
I'm gonna.
handle that.
I got some new fin porn. I actually think my fin porn is better than yours, and so I got some new girls. We're gonna be pimping out here in some of your ETFs. All right, let's keep moving here. So Matt, getting away from the European stuff. What's top of mind for you? Other thoughts? It could be anything because you're all about juice and what's moving. Maybe what would be a useful question. Here's a good one for you. So you watch flows, you see where the hamsters are going in the maze. So what are they buying? What are they fleeing from right now when you look at your ETFs?
It's not that they're buying or people are just trading them. And we've got a bunch of 2x levered and inverse, and they've definitely fleed from the crypto treasury stuff. So we've a bunch of our levered and inverse or crypto treasury. BMNR, Tom Lee's crypto treasury being the biggest, but we haven't seen the interest there at all. They're fleeing from MicroStrategy, the original crypto treasury. But our kind of Mag 7 names, Tesla, Nvidia, Google, those are all holding strong. So it's really been more of a flight away from the crypto stuff. We also have 2x Bitcoin and Ethereum. Yeah, I don't know that we've seen money come out of those as much as just they've gotten their ass kicked.
So, Matt, that's really interesting. So, to me, not knowing anything about the inner workings of Tuttle Capital Management, but from my days at Fidelity, we always saw, and you see this too in the public data, like when you look at funds flows in and ETFs, flows always follow returns. And so, if you're telling me that some of this AI nonsense, even though it hasn't acted so great, there really hasn't been much selling. I know what to do with that. Complacency reigns.
I
So,
mean, it could be, but remember, when you're doing levered and inverse, it's different because they're trading vehicles. So what we actually see is when something's going down, we see the money coming in. And then when it's going up, we see the money coming
yeah,
out.
but hold on. In a normal mean reverting market, that might work. But let's just hypothetically think for 1 second, because I think this is right. You told us, I think, the other week that the money was actually coming into the MicroStrategy ETF, correct? Because they're buying it as it goes down.
They tend to buy that when it goes down. And then we've got the inverse micro strategy where they tend to buy when it goes up. So like
Correct. So okay,
we
so
had a
so work with me.
day.
Work with
Yeah,
me. Work with
go.
me. Work with me. So like if this is just business as usual, where MicroStrategy goes back up again, then fine. But what if this is a regime change? What if it is lights out? Then the fact that they're buying this thing, it's like the plane's going down. I'm the co-pilot. I say, Matt, put your foot on the gas. He goes, George, I am. It's not working. Something's wrong. Okay. If we're in a regime change, these guys are gonna get absolutely destroyed.
Well, if we're in a period where crypto doesn't go up all the time and where every dip doesn't immediately get bought, then it's hard to justify MicroStrategy being worth more than the Bitcoin on their balance sheet. And so, what I'm more interested in right now is the preferreds, STRC,
Sure.
and then SATA is
Right.
another one that's from
I I I I,
the Strive guys.
I get it, but because I am a DGen and I want to be irresponsible, if I'm looking for the information content in your flows, your point stands. I'm not disagreeing with it, but if I'm looking at the information content in your flows, and I'm just going to channel my inner map back to Matt, which is it's funny we were talking about if Bitcoin, like as if it's in the future tense, it might not go up. Well, that's what it's doing right now. So let's put it this way: if current conditions continue, namely it doesn't go up, it's just flat to down. At some point, all this bottom, it's the old, Matt, the old Chinese proverb, man who try to pick bottom gets smelly fingers, right?
I
So,
did not know
so,
that. That's awesome.
okay, you got to use that one, right? Man who try to pick bottom gets smelly fingers, okay? So, they've been buying this freaking thing the whole way down. And so, like, it might be, it's like the little boy that cried wolf. One day it will be wrong. There's going to be a problem. And it's in the same way as well, And then I love, and we should get Joe in here for a second. I want Joe, you got to get up here. Joe knows more about. I have no idea what the price of Bitcoin is going to do. I really don't. But I can just speak to the behavioral tendencies of a lot of the guys buying and selling this thing. So I actually find it interesting. So, for instance, give me another one. So, all right. So let's leave the levered India out for a second. But I remember back in the day, you could look like at the Fidelity sector funds, the precursors to these ETFs. You have a tech fund, a healthcare fund, a gold fund. And, as it would go up, money would come in. Okay, it's classic it's classic FOMO, fine. No, not surprise there. But where it gets interesting is when um, the price stops going up. Say it starts to roll over. And usually it takes a big enough rollover to get people to sell because they're like, oh, it's just a healthy correction. Don't you love that, Matt? When you're losing money, they say, oh, don't worry, it's a healthy correction. Oh, I feel better now. That was a healthy way of losing money as opposed to an unhealthy way, right? But it usually takes a sufficiently large loss to get their attention. That's not business as usual, all right? So I'm guessing in this environment, it may be more time than price. It's going to take us an extended period of time. If Bitcoin, let's say Bitcoin's the same price now as 3 or 6 months from now as it is now, and let's say Silver and gold are going back, which, by the way, break in. I'm calling it right here. Right here. The correction in gold and silver is up. We can bring Jack back in here. But the bullshit we saw on Friday with the tariffs, I made the case to Jack. Jack can dunk on me if he wants to, or he can say, no, George has it right. Gold and silver going right back up again. That correction that you were waiting for, it's done. It's over. I can explain why if anybody cares. But the important thing is, you watch, again, not the news, but the reaction to the news. So if the clown show, if they're still piling in even when it's going down, that's a bad sign. At a certain point, they'll stop buying it, and then they got to sell it, and then the bottom falls out. Just like the other way, take gold and silver. I love this. I love this so much. And Jack, Matt, maybe you can speak to position. I don't know if you got any of these gold and silver guys, or Jack can talk about it. Oh, correction in gold and silver. Oh, at a minimum, even though I'm bullish on gold and silver, I jumped in 3 weeks ago at the high. I'm not on the record from a year ago having recommended it, but I've been bullish on gold and silver for a long time. They only tweeted out the first positive tweet 3 weeks ago, but I digress. Now it's like, well, we think the long-term case looks okay, but we need to have a profit-taking bear market entire stock price to burn off the overbought condition. That is the lazy, financially illiterate, lobotomized CNBC contributor view of the world. These markets trade bid. They got ahead over their skis because you had crypto bro and momentum bro buying this crap in the fall. So silver and gold went from being a fundamentally based trade where every freaking central bank in the world's buying it to a momentum trade. So those assholes, technical term, pushed silver to 120 or wherever it went to. They got rinsed. Jack, I'm coming to you. They got rinsed. Now they're out. They showed us where the bottom is. I don't know if silver's going back to 75 or 70. I have no idea. I'm telling you right here, right here, right here. Gold and silver are going much higher. Much higher. How much? I don't know. When we get to the year end, if I say 8,000 by year, and people say, well, George, it only went to 6,000. I have no idea. I'm telling you, it's up and to the right. I think 6,000, 8,000, 10,000, all very possible for gold in the next year. I think silver at 150 or 200, all very possible all in the coming year. Why? I'll become bearish on gold and silver when you can get bullish on money. I'll become bearish on gold and silver when you get bullish on some sensible policies, economic or financial. I'll get bearish on gold and silver when geopolitical risk dies down. All the drivers, all the clowns on CNBC, all the furus, they're focusing on price and only price. It's not the what, it's the why. Why is this happening? The drivers, same way you analyze the stock. And Joe, you're going to have to hold it because I got to get nobody back in here. It's the drivers. As long as the drivers are in place, it's all good. It's like, why did the Mag 7 do so well for so long? The sales and the earnings went up. Yeah, the PEs went up too, but it didn't go up for random reasons. It's not a rando thing. But you get some jerk. Well, the RSI and the Fibonacci retracement and da-da-da-da. The same geniuses that analyze, Bitcoin with a 4-year cycle. That's bullshit. That's voodoo. That's Ouija board stuff. So I'm telling you right here, right now, what Trump did. Sorry, I'm going to rant, but this is perfect. When the whole trade thing got turned over on Friday, a few things. One, huge gaping hole now, $400 billion out the window. The tariff revenues they were counting on. And we could talk about Howard Lutnick and what a scumbag he is. Yeah, he should be in jail. And Jack, I want you to talk about that. The money is his son's cashed in on the tariff revenue thing. But there's now a bigger hole in the budget, which means more pumping, which means more money printing, which means more gold. There's also increasing uncertainty. Gold and silver love uncertainty. So I'm telling you right here, right now. I was buying this shit on Friday. I don't care. Oh, George was up 10. Screw that. Who the hell cares about 10%? If you think I'm right, I may be wrong. What's 10% between friends? George, if you're telling me gold can go to 8,000 or silver can go to 150. All right, I gotta stop. I gotta take a breath. Jack first, and then Joe. Jack, please respond.
All right, you specifically requested the Cantor thing. So, Cantor Fitzgerald, which Howard Lutnick used to run, he had to divest his interest, yada, yada, when he got into politics. So his son now runs it. Shortly after the tariffs came out, Cantor Fitzgerald started buying optionality on tariff refunds in the event tariffs were ever struck down. So if you're paying the tariffs and you have some claim, let's say the tariffs got struck down, you had some claim to get your money back, you could sell that claim to Cantor Fitzgerald for 20, 30 cents on the dollar. And now that the tariffs have been struck down, all those claims on refunds that Cantor Fitzgerald bought, they have now 3 to 5x their money, assuming they're going to get that money back, which I think is almost a certainty in trade court. So, conflict of interest, hell yeah. Sleazy as all get out. Were laws broken? I don't know. I'm sure somebody's going to try and push that angle, but yeah, there was. That's that doesn't happen.
And Jack, that is what Jim Chanos would call legal fraud. That is something which just because you can do it doesn't mean you should do it.
100%.
Last I remember, government officials, and don't tell me, well, it was his son, some asshole. I mean, Howard Lutnick is one of the dumbest people I've ever met, okay? I met Howard Lutnick years ago. I was short his stock. He came in to visit me in Boston. I knew that he knew that I was short the stock. He's a shyster. It is outrageous that this is permitted. Outrageous. I don't care that it's legal. It's wrong. Absolutely wrong. Everybody knows it's wrong. By the way, you're going to see a tweet coming out from me very shortly about Eric Jackson talking about wrong. We're editing it right now. I'm asking all people of good conscience to get up, feel like Howard Beale and network. It's like that rant I did the other day. You know, I taped myself. A man as hell is I'm not going to take it anymore. Okay, what Eric Jackson does is wrong. What Anthony Pompliano does is wrong. What Kathy Wood does is wrong. What Keith Raboy does is wrong. I don't want to hear about it's legal or illegal. That's not the point. Maybe the laws are not written the right way. Joe's going to put a legal perspective on this. The problem is the laws can't keep up with the bad guys. It's not something you would do living in your integrity. I suppose if you have no integrity, they'll do it. It's wrong. You should see the tweets. You should see the tweets. There was one yesterday. Nobody. Go while we're doing this. Go look at it. Go do a search on I forget the name of the piece of crap digital currency incinerator he runs now. But you know, he went into this thing. It was like a 30-cent stock. We're gonna become just what the world needs, a digital asset treasury company. He goes in, blah blah blah. We're gonna buy Open Door. We're gonna buy shit coins, whatever. This stock was unfreaking believable. Stock was 30 cents. I'm making up the numbers. I think there were like 30 million shares outstanding. I can't remember. Order of magnitude as well make the point. 30 million shares outstanding, you know, 30-cent stock, $9 million market cap. Nobody, this is going to blow your mind. So then you look at it. It turns out, fully diluted, there weren't 30 million shares outstanding. I think on the first go, there was 180 million shares fully diluted. And then if you look at the fine print, there's a potential, I want to say, I think there's 1.8 billion shares outstanding. 1.8 billion shares outstanding. It could be. So you look at the numbers, it's like, are you kidding me? This thing is worth toilet paper. It's not worth anything. You shouldn't have a positive integer in front of the stock price. So idiot bro, illiquid bro, Eric Jackson bro, they take the stock up from like 30 cents. I can't remember, it went to like 60 cents or 90 cents intraday. I don't even remember. It's like that piece of crap BETR. Last I looked, it was 14 cents. This is just wrong. Eric Jackson, shame on you. Eric Jackson, if you have any decency, you'll come in this space. We will be polite. I'll have Joe Carlos-Seri, my legal counsel, presiding over this. But you won't, because you're a desperado scammer. And I hope the open army turns on you and court martials you. And by the way, it's not just Open Door. It's BETR. It's the shit NeoClouds. It's HUT. It's ABTC, which was the frickin' Trump American Bitcoin. All right. This guy is a public menace. If he's not in jail, it's only because the law is written inappropriately. I'm dead serious. Doug Cass, get your butt in here. Cass and I are going to set up an vigilante SEC. People were taking shots at me. I said, let's have a GoFundMe page to go after this shyster. What's the matter, George? You can't pay for it yourself? No. Wrong, you idiot. I think the benefits, Eric Jackson has no money, that come from this lawsuit should accrue, the people that accrue the benefits should pay for it. I've had enough. Doug Cass has had enough. Doug Cass back in the day wrote a book with Ralph Nader. I've had enough. Doug Cass has had enough. We're going to do what the feckless SEC refuses to do. We're going to call out as well the media. The media is complicit in all this. The media has blood on their hands. They enable this stuff. All right. You know, if no one, I mean, listen, if you knew a priori before the fact that Bernie Madoff is a crook, don't tell me about free speech. Don't tell me about free speech. You're running CNBC. It's your prerogative to not have him on. He doesn't have a right to come on CNBC. Who in their right mind would platform Bernie Madoff? They platform Eric Jackson. They platform Kathy Wood. They platform Shea Ballor. I can go on and on and on. The names are unimportant, okay? You and Doug, I really get on your goddamn cell phone and get in here. Otherwise, I'm going to keep running my mouth. The media is responsible for this. You have idiot interviews. It's infotainment. There's not a single hard-hitting question ever asked. And I'm going to name names. It's CNBC. And then it's podcasters. Anthony Pompliano, get in here. What he did, the worst de-SPAC in the history of the world, down 80%. But don't worry, he's good because he gets all these free shares and all these fees. And not only that, Cass, I need you to go after him. He sold one of his assets, this Sylvia CFO bullshit thing he has, into BRR. Now, he may not go to jail because it was written in a certain way with the lawyers that protected him. But anyone of decent conscience knows this is wrong. This guy's a scumbag. It's wrong. At a minimum, Pompliano should disgorge any profits or any shares that he got from this transaction. Natalie Brunell, nice woman, idiot. She platforms Eric Jackson. Phil Rosen, why did you have Eric Jackson on your show? Downtown Josh Brown, what are you doing? My good friend Charles Payne, what are you doing? I could go on. You're leading innocent people to slaughter. What are you doing? This is wrong. Hold on, Joe. This is just wrong. And if the SEC won't do anything about it, and unfortunately, I don't want to get into politics, we're in a world where lawlessness is now the rule of the day, but both sides do it. So not a word about left, right. I don't want to hear any bullshit about MAGA, libtard. That's not allowed in this room. This is just wrong. We need to take back. We know what's missing here? It's integrity. It's honesty. Live in your integrity. This is not the way I was brought up. It's not the way anyone in this room was brought up. All right. I want to go to nobody quickly and then Joe. Nobody. Your floor.
What, you want me to elaborate on that?
What part did I get wrong, or where do you want? Or where did I have blowtorch gasoline on it?
All right, so here's where I'll distill it way down. All those names that you just cited and the outright capital incineration, what has enabled these people to emerge and to gain the followings they have has been the endless supply of easy money created by this 50-year experiment in lower interest rates and monetary easing. And this is the reason why, since the middle of 2022, I have not trusted price discovery in any corner of the market, and why The only thing I've been willing to really get long has been gold and silver, is because of this. And you're right. I mean, whether laws are broken or not, this outright financial degeneracy runs rampant on Wall Street, and I think people are being slaughtered. And I think ultimately the debt that all these people are taking out is being dumped into pension funds and places where the losses won't show up for years. And so at the end of the day, in my opinion, gold and silver is the answer to this. And now the one caveat I'm going to throw into the initial thing that started this whole rant was about the gold trade over the last few years, and now the tariffs are what they are. Where does that go? And we brought this up on my Patreon Zoom the other day, George. A lot of the move in gold last year was tariff uncertainty. And then a lot of the move in gold, especially in the fall, resulted from that tariff uncertainty. You had a huge flow of metal from London to New York in the first quarter of 2025. And it actually, so much gold came into the country that American GDP went negative very briefly in the first quarter. That was because people were worried there was going to be tariffs. Better get the gold on the right side of the invisible line before that happens. And of course, it didn't happen. Then that created a shortage in London in the third and fourth quarter, where you had this huge arbitrage opportunity was created. Metal was trading for more overseas than it was trading for here in New York. And so the play started to reverse. And the metal started going back to London to capture the arbitrage and alleviate the shortage. That was the result of the shortage created by the tariff uncertainty. So I don't know how much. And then, of course, the move that we got in the first few months of this year, that was just crypto bros and idiots chasing momentum. They're going to lose money somewhere. Might as well be gold and silver, I guess. Um, the question I have now, because the tariff thing has been, I think, taken out of the equation, how much of that move from where we were in 2024 to where we are now was driven by tariffs, and will that unwind? I'm not bearish gold. It's still the only thing I'm really willing to get behind. But I do have questions about what is the fallout going to be, because these geographic disparities resulting from the tariff debate were largely responsible for some of the big moves that we saw last year. And I just don't know how that shapes out now. It's more of a question than a commentary.
Yeah, no, and I think that's well said. I think that's well said. It will show itself. I'm just going to say, I do. I mean, Jack. One other point, we get Joe in here. Joe, I know you're trying to, but just hang there for a second here. So Jack, you and I were talking the other day. By the way, I urge everyone again to follow Nobody on YouTube and become a subscriber. He does a fantastic um, Zoom Patreon thing on Friday afternoons. People don't know this, but I'm going to come out of the closet. It's one of my little secret things. So when I do my spaces, I sound more intelligent because I just plagiarize and repeat what you do in your space. So there you go. I scratch my back. You scratch your back. You scratch my back. So at any rate, one of the points, Joe, I like, Jack, I like you to elaborate on, because I brought it up, and then initially you were a little confused, but then you got it right. And that's the point whereby, recently there was this one whale in China who really bashed silver. This is after the initial down, it rallied back up and then went down again. And this guy was deliberately loud about bashing the price of silver, and it frightened everyone. It pushed silver down to like below 70 or whatever it was. And he let it be known he was short. He wasn't trying to hide it. And someone reminded me of a similar instance that occurred with nickel 3 or 4 years ago, and you're going to go through the particulars, Jack, whereby similar thing happened. Some guy came in, nickel's even less liquid than silver, bashed the hell out of it, did it in a very loud way, wanted to be known, and okay, the price went down some more. But again, it'll show itself. Once the price stabilized, game on. What do I mean by that? Well, guess what? The market knows that there's a whale who's short big time. So what did it do? The price went up 3x. Okay, it wasn't a 10x, but it was 3x. So in that spirit, just one of the many reasons why I think the correction's over. The market is getting a little bit of price momentum going here, and the market knows that there's a whale at short in size. Oh boy, we'll see new highs in silver before you know it. Jack, back to you.
But
No bogey, quiet,
can we
bogey.
hear about? Can we hear to? Can we pass it to Joe, please?
Yeah, Joe, go.
Okay, I have a lot of thoughts. I can't go in 10 seconds here, George. You had a very interesting rant, and I'll just say this, okay? I think you raise a
Yeah,
very
Joe, Joe. Just one thing. You can have as much time as you want, so the floor is yours.
Well, I just want to talk about this subject because I think it's the heart of one of the most important discussions we could have, which we got to, which is your idea of morality in markets and what place does morality have? And when you have the rise and complexity of fraud, which I think anybody can see in various different types, both legal and illegal, across all social norms, across every aspect of government, across every aspect of society, what place are you going to have in that? Are you going to be sitting there yelling against the clouds, telling them not to move, or are you going to get on board with it? And to me, I think it's an individual decision. You have to make it. And I'm not saying don't speak out about these things, but at the end of the day, all of us, either personally or professionally, we're trying to make money, and we have to sort of we have to just carve out where are our limits. Where are we going to say we're not going to invest in what we know is obvious fraud? We're not going to invest in obvious hype and momentum trades that make no sense, but we're also going to realize that we run a real risk in the short term of underperforming, looking silly relative to peers. And that's just the reality. That's nothing new. I think the difference is it's been pervasive. It's been institutionalized and normalized. When you have the president launching a meme coin, and his family personally, not to be political, but it's just reality. It's a fact. Personally extracting billions of dollars based on that meme coin. How can you get mad at Eric Jackson and expect public outcry to be there? How can you get mad at people like Pompliano when they're doing these things and saying things that are not, objectively not correct? But you think there's going to be public fervor and getting behind that and having regulators who are asleep at the switch and have been for the better part of 2-3 decades now. You expect them to step in, and then what are you going to get in private litigation? You're going to get a speeding ticket, some lawsuit, that has to be settled after they've already extracted billions or tens of millions of dollars from the marketplace. To me, I try to just put it out of your mind and make personal moral decisions, because I think it clouds your judgment, does not help you in the investing exercise to get frustrated by all these things. And I'm sensing the frustration in your voice. I share it. I'm not saying it's right.
Joe,
I'm
Joe,
not.
Joe, Joe, let me interrupt 1 second. You're kind of like me. You're very passionate, and very. I don't want to say I'm smart. I'm just going to accuse you of being smart. So hold that thought. It's a slightly different thought. Everything you're saying is true. Okay. So let's say you're totally right. I shouldn't get emotional. Correct. Separate question though. How do you answer the question of? And you're totally right. Like monkey see, monkey do. Everyone's taking their that lead from the president. What do we do? How do we get the system to change so that Kathy Wood, Anthony Pompliano, Eric Jackson can no longer do what they're doing? How do we affect that change?
It's the same story, the history rhyming once again. You need to have basically a collapse of something. You need to have why did the rise in complexity of fraud occur at a pervasive rate at leading up to the Great Depression? You need to have some watershed moment where everybody says, okay, this is a crisis. We need to rewrite the rules because it was just got far too out of hand. And absent that, if the plates keep spinning, if there's no collapse or catastrophe, the things just have this
Right.
inertia and momentum, and they just
Right.
kind of get
So, so,
continue
so,
on. It gets worse
yeah,
and worse and worse.
Joe, I
And,
totally
and
agree. Okay, I totally agree. So, what that leads to, what nobody and I were talking about on Friday, my initial reaction when I discussed it in the space with him, is Zoom. It's gold because in a world,
but the problem is George. Just to interrupt you. I'm sorry, but the paradigm can last entire lifetimes, and that's the
Joe,
thing that I
Joe,
think.
Joe, 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 do me a favor. Do me a favor. Listen to me in a listening, not attacking litigator mode, because I'm trying to do the same to you. Okay. If what you're saying is right, and unfortunately I believe it is, in a world where there's no integrity, there's no truth, what can you trust? You can't trust institutions. You can't trust Wall Street. You can't trust universities. You can't trust politicians. You can't trust media companies. I'm not a tinfoil hack guy, but think about this for a second, all right? We could keep spending more money, and especially with this tariff thing, if this comes unstuck, I print even more money. The money in your pocket is just going down in value every day. There's no trust in that institution. Oh, by the way, let me just, I'll save this other point for later. Trust is the missing, you said it, trust and integrity. That's what this conversation is all about. And I'm not a gold guy, but the one thing I do know is they can't print more gold. All right. And you can't do some piece of code which is going to make gold go away. So, in a world where increasing counterfeiting, lack of trust, geopolitical tension, et cetera, et cetera, et cetera, it's all gold positive. What would you say to that?
I don't disagree with any of it.
Yep. Okay. So, with all this in mind, Joe, because you and I mean, we got to meet someday. Do you ever get to New York, Joe?
Yeah, I'll
All
be
right.
out there actually in May.
All right. We'll have dinner. So, Joe, you and I are all about trying to help people. And look, we all get it wrong. It's not the issue, but we speak out, live in our integrity, and try to do the right thing by people. What should people do, Joe? Because you and I have a similar worldview. What should people do?
I don't think you can give generalized advice like that. Because you mean investments? I mean,
Yeah,
everybody's different, right?
investments. Okay, like I say to people, I express my views on technology and gold and this and that. So, like, what the average guy at home, a woman who has 60/40 portfolio, you know what that looks like. What would, I know you don't know them, but just generically, what would you tell that person?
I tell them they have to get smarter. Everybody needs to get smarter. That's the only way you're going to be able to suss out the scammers and the pretenders and the fakers. And you can't be on autopilot in today's world. I don't care. I don't care what. Even if you have subject matter expertise, we need broad, you know, uh, based knowledge that's going to be across multiple different platforms and sectors. And you can't trust anything, right? You just said it yourself. Like that's the antidote. The antidote is don't trust anybody. Don't trust your FA. Don't trust everybody. Ask more questions. Be more inquisitive and try to broaden your knowledge base. But the regular guy's not going to do that. We just know it, right? I'm being a realist with that.
Yeah, 100%, 100%.
But I mean, think about how much our system is built on trust. Okay, and I got to run for a second
Yep,
here, but that's the problem. The problem is that we have designed institutions and structures where we're supposed to rely on these people, and they're fleecing us.
yep. And sadly, Joe, I think you're right. The plate empty. I'll get to you 1 second. Sadly, Joe, I think you're right. The plates will keep spinning, and it's going to be Mr. Mark. It's going to fall to Mr. Market to discipline people, and sadly, that's the way it always winds up in the end. So, hey, Joe, thanks so much for stopping by. I really appreciate you. Always learn from you. Always love exchanging ideas. All right, let's go to Empty. Empty, what's up?
Hey, how are you guys? I just wanted to come in and kind of bring down the focus onto, and forgive me if I'm going to be long winded in this, bring back the focus about timing. Because I'll just disclose I'm a big old bear. I only come out of the woodwork when I feel it's time for some damage. That's, I don't care. I'm going to disclose that. So we all know, you know, NVIDIA. We all know the round tripping scheme that's been going on. We all know how big of a deal that Blue Owl is, and anybody who says otherwise is crazy. Because so this is infecting not only private credit. It comes back to the data centers, and it goes back to miners, and then the whole thing starts to go into this round tripping. Pardon me, circle jerk with Microsoft and Oracle and all and NVIDIA and all of these things. So alpha question is we can't measure it on time arbitrarily because we could be wrong. It can go on forever. So I'm going to use the analogy of war premium with Jensen and his leather jacket. Like, let's assume the war premium on him making headlines and everything and talking all this good game is running out. But is it better to view this in a sequential order and look for dominoes? Like, okay, Blue Owl goes to Iren, which goes to this. How are we going to try and line this up so that we can time this correctly?
You ask a great question, and I go back to I don't know if you were in the room when I was talking earlier. I think you were. The market will show itself. It doesn't matter what I think or what you think or nobody thinks. No matter how compelling,
100%.
no matter how compelling or logical markets are anything but logical. It doesn't matter. I can't tell you how many times I've lost money. I've been right. I've been logical, but I've been too early. So what you need to do is listen to the message of the market. If nobody put out eloquently all these you laid out all these data points about this thing being bad, that thing being bad, this financing falling apart. If the market just blows it off, it's like, okay, nobody cares right now. It doesn't mean it's not working. It's just right here, right now, it's not working. On the other hand, if Oracle starts tanking because it's like you spent too much money, it's like, oh, wait a second, that's different. When that was like the shot across the bow, when that happened, that was different. That was a warning sign. So I think you should keep your ear to the ground, watch how the market um, weighs in on every one of these data points, and take your cue from there. So if they start punishing companies, you can start. I'm a bear too. I mean, in my DNA, you weigh into it. Okay? Like idiot like me, I was short Tesla at the right time, short Tesla at the wrong time. To do all over again, I should have just only been short when the market response function, so to speak, I hate that term, was such that it was rewarding, It was validating my assessment of the negative data points. When the market doesn't care, it doesn't matter. So I can't give you the answer, but I can give you a framework for how I would approach it, if that makes sense.
No, that makes sense. I'm just kind of collectively wanted to suss out, where we think this dominoes
Yeah,
is going to, this pathway
yeah, no.
is.
We think, I believe, I'm going to speak for nobody. I just speak for nobody. I'm not going to speak for anybody else. Nobody believes we're there. I believe we're there. Some of the others in the room aren't quite as convinced. But that's kind of where we are.
I mean, we look at IV, we can see that it's, things like of major moves are getting priced in,
Yeah, and by,
and
and by the way,
and
you look at IGV, the software ETF. I think it's a very interesting situation. I would not at all be inclined to buy that thing. I mean, and another reason I think it's going to go down, way down. I mean, the valuation is still stupid, the uncertainty, but forget about all that. Forget about all that. Forget it's oversold. I think one of the problems that you have now, as opposed to go back the last few years on the hyperscalers, great companies, dominant moats, huge cash flows, the whole deal. So the unit economics made tremendous sense. So tremendous visibility in a world where there wasn't visibility. So people pay up for growth. Fine. Now we're in a situation where there's more growth elsewhere. There is growth elsewhere, so growth is not such a scarce commodity. So people are willing to pay more for it, number one. Number two, to the software stocks. We've now gone from, hey, these are good companies with rising estimates and defensible moats, to, hey, wait a second. Whoa. A charitable interpretation would be there's going to be winners and losers. I think most people would agree with that. Out of this, I don't know if Atlassian is the one. That's what people tell me it's a good company. I don't know the valuation. But there are going to be some guys, who are just toast. I mean, I have a former employee, a present employee of Adobe, telling me that, yes, this is their Kodak moment. Adobe's Kodak. Whether they're right, whether they're wrong, I don't know. But I find it very rich, when people who don't have nothing to do with Adobe telling me it's a good stock to buy right now. When I have an employee inside the company telling me, no, we're having our Kodak moment. Do what you want. I don't care, but I know where I'm going with that one. So there'll be winners and losers. It's not about Adobe. So I don't want any hater. No, get lost. It's not the point. Point is, the software stocks have now fallen into a situation, and they could bounce. I have no problem with that. Not at all. Would I short them right here, right now? No. Could bounce. But here's what I also know. In a bear market, and Stan Weinstein would say these stocks are in their own private bear market for what the indices are doing, you only can be flat or short, flat or short. It is bad form to try to counter trend trade. Never, ever, ever do that. Maybe some people like doing that, but the odds are against you. Stay with trend. So I would never buy the software stocks here. They may go up. I have no argument with it. It's just horses for courses. You like blondes, I like brunettes. It's not the way I run my business. Fine. But the problem with the software stocks in the bigger scheme of things, they've now been convicted in the court of public opinion. They're not guilty until proven innocent, i.e., it's going to take a long time, months, years, to figure out whether Adobe is having its Kodak moment or Atlassian is the one to buy. And until we get clarity on that, markets do not like uncertainty. Valuations have contracted. They will continue to contract. And when I find really rich, I look at some of these stocks, it's hilarious. I think it was ServiceNow. The name doesn't matter. It's just the point. So I'm in one of these chats. These guys are like software nerds. Oh, you gotta buy software. The RSI on ServiceNow. It can't go any lower. It's never been at this level. It's the lowest it's been in the last 5 years. And if you look at every time it's been here, it's always gone up, 40% over the next 6 months. Okay. Talk about resulting in data mining. So I look at it, and again, it's one of these price-based discussions. And I look at it, and I'm like, well, wait a second, let me understand this. Assume, it's like the line from The Big Short. Explain this to me like I'm a child or a golden retriever. Or, like I say, I'm Warren Buffett. I came down from planet Mars. Let me understand this. Forget about the chart. This thing just went from 90 times earnings and 20 times sales. 90 times earnings and 20 times sales. to 50 times earnings and 12 times sales. And the growth rate's decelerating. We don't know by how much. And you want me to buy it just because it's quote unquote oversold. I'll remind people what the true definition of oversold is. Oversold is it went down, I forgot to sell it. It's the people who get stuck in the stock who claim it's oversold. Just like what's the definition of overbought? You missed it? All right, it's overbought. So you want to hate on it because you missed it, hoping it'll come back down. So this idea I'm going to buy Adobe because it's oversold. The great technician Frank Teixeira from Wellington and Vanguard. I'm going to get Frank in the room one of these years. He would go through this exercise. I thought it was great. He'd say when people say something's overbought or oversold, like we kind of know what they're getting at. Like it's too displaced from a moving average. That's fine. I'll accept that. But to imply that oversold means it has to go up or overbought has to mean this has to go down is completely wrong. Completely wrong. I will
Hey,
die on this. Who's talking? Be quiet. Empty, mute yourself. I'll die on this hill. This is a very important lesson. I'm trying to be funny, but it's important. So he does this game. He tests with the crowd. He'll put up a chart of a stock. Let's say it's Microsoft. You know, when Microsoft's doing really well, big growth stock, Microsoft, Google, whatever. Put up a chart of Google, and it goes up. It goes up, 30%, and then 40%, and then 50%. And he doesn't show you where it's going. He doesn't tell you what it is. You just see it's gone up a lot. He goes, "What do you think this is?" People say it's oversold. And he moves the thing a little bit more to the right. Now it's up 60%. It was at 50 before. Oh, sorry, it's overbought. Now it's even more overbought. He's like, GTFO. For you to say it's overbought, that's a really arrogant thing to say. That presumes that you know where it's going. What if it turns out that it was, a company that's got a cure for cancer? You're going to say it's overbought? It went from 10 to 50, but let's say it legitimately can cure cancer. It should be at 1,000. And retail bro are going to sit there with their crayons and their lines and saying it's overbought. All the summa cum laude graduates of the Dunning-Kruger Institute of Finance know what you own. Peter Lynch, call your office. You know something? If they really had a cure for cancer and the stock went from 10 to 50, and you think it's worth 1,000, you should be buying it. Oh, but no, I sold it because it was overbought. People, and that's the whole goddamn problem with Twitter and these gurus and the Shea Ballors and all the idiots, the meme stock guys, the guys with the Discord rooms with the baseball caps on backwards with the gold chains. Again, could you imagine talking about a stock in a real place where all you talked about was the price and the story? That's what these morons do. Empty. I don't know. You triggered me. I don't know where it sounded pretty good. I was going somewhere with it. I don't know where I went with that. Okay, but I'm telling you, to paraphrase Jim Cramer, who I've lost all respect for, but his famous rant was totally wrong. That Bear Stearns, it's kind of funny. It's very rich. They know nothing. They know nothing. Bear Stearns is good. No, these idiots. Shea Ballor, I'm calling you out. Eric Jackson, I'm calling you out. Anthony Pompliano, I'm calling you out. Right here. This is my opinion. I'm calling you out. You know nothing. And the amount of money you cost people, I started to go on the rant earlier. There's a guy, it is so sad. It is so sad. Somebody put, I think, 2/3 of their parents' IRA into fucking Eric Jackson's digital capital incinerator. It's down 50%. Now, know what you own. Yeah, you can say, well, that's not Eric Jackson's fault. That's the retail idiot's fault. There's a reason we have laws. There's a reason if you work at a real company, you're limited as to what you can say. There's compliance. Everyone should act in their way, sort of like have your own, be a shadow compliance code. Even if you're not regulated. I'm not regulated anymore. I was registered for a short while with Nope, that fucking disaster of an ETF I bought or launched. I almost never talked about the ETF in spaces. I wanted to avoid conflicts of interest. But the problem is, in the publishing world, you can say whatever the hell you want. So you have some, squat and leave it. So we all get the same shit. Motley Fool, Stansberry Research. Did you buy Nvidia at 16 cents? Did you buy Microsoft at 45 cents? Did you buy Netflix at $1? No, asshole, and you didn't either. So Mark Chaikin, go shove it up your ass. These people, it's legal fraud. It is wrong. It is just wrong. And the way we're going to get rid of these people is they got to be called out every step of the way. So I agree with what Joe said. Don't get emotional in your investing, but I'm allowed to get emotional here. People got to wake up. Otherwise, it's not going to stop. It's all about investor education and financial literacy. That's what I stand for. Empty. Back to you.
I just wanted to, echo that and actually take it one step further and say, don't we think that these metrics of, oh, it's overbought, oh, it's oversold, don't they get distorted in the with the leveraging of this unwind as we rotate in and out of tech and into something else, right? Isn't that going to distort it even more with all that
Yeah,
money
because
moving?
on the way up, it goes up far. That's one thing too. My good friend Tom Thornton is in the room. We've discussed a lot. I'm saying this to you affectionately as a friend, Tommy. If there's no mean reversion in this world, you are a dead man walking, Thornton. Because they take because any rational person is a dead man walking. They take this stuff to extremes that you possibly couldn't imagine. And then you know what the really rich thing is? I love you, Empty. You know what the really rich thing is? On the way up, Rich, Empty, explain this to me, or Jack, or Matthew, or okay, any of you guys. This is so. I want to hang them by their own petard. Listen by their own petard. It's like, bro, number go up. Look at the chart. Oh, valuation. You're a boomer. Oh, nah, nah. Hey, Empty. You listen to me, Empty. You got this. You got me.
Yeah.
Empty. Listen. Now when it's crashing, they want to cite valuation as support. You like that?
Yeah, I know. It's funny.
Shea
I can't.
Belor, you are a moron. Everyone should unfollow Shea Belor. Everyone should dunk on Shea Belor. Anthony Pompliano, Eric Jackson, Kathy Woods. There's too many of them to name here. It's like that old judge's definition of pornography. Hard to find, but you know it when you see it. I don't want to hear about it's legal. Oh, George's defamation of character. Come on, bring it. I'm here. I'm not going away. Bring it. Oh, here, you liking this? I'm done. I am done. Eric Jackson, I'm coming for you, and I'm not going to stop until I got you. I'm not kidding you, we're going to do a GoFundMe page to pursue legal action against you. Anyone who lost money in Open Door, class action lawsuit. And I know plenty of lawyers that'll take that case for free. So before you open your big mouth again, you might want to remember that. If you start behaving, I might soften up a little bit. And you, Pompliano, with your BRR, I got your number too. And you, Kathy Wood, I got your number too. And you, Shea Belor, I will search you out. I will destroy you. And you know why you really should be worried? And oh, here, you're going to love this, man. I'm probably the oldest guy in this room. One of the reasons Matt loves me is because I'm crazy. Maybe Matt does think I'm crazier. I'm 69. I don't care anymore. I don't care. I get it. If you're 29 or 39 or 49, you got to worry about your future, your job prospects, whatever. But I'm good. I don't care. I don't care. I don't care. I want to help people. I want to help people with financial education. There's a glaring need for financial education. I'm 69 years old. I don't need any more money. I don't like material things. I got a dog, got a wonderful partner. I like wine. I love my classical music. That's it. I'm good. I don't need the money. I don't want the money. But I don't care what religion you are, morality is universal. And I'm done with this bullshit. I'm done. This is a hill I will die on. And you know what? This is going to be recorded. And I'm telling all you people, I want you to tell people about this space. Do what you want. I'm probably not going to allow for the replay on X. I'm probably just going to have the replay up on Substack and YouTube. But we can start a movement here. We can make a difference. And that's what I want to do. All right, enough. We've been going 2 hours and 15 minutes, and I'm hoarse because I've been yelling and screaming. I'm going to allow anyone who's on the stage here, Matt, nobody, Bitcoin, Tina, empty. Any last thoughts or comments?
Okay, you gentlemen were talking about gold earlier, gold and silver, and
Yep.
we know we're getting a lot of degens and stuff like that coming over to trade it from Bitcoin. That's a fact. They're still in the game.
Yep. Yep.
I'm personally not. I'm personally not doing anything with it really.
Yep.
I'm kind of, it's not my risk appetite. And right now, I don't care about I don't care about March. I care about this week. Right now, dollar had a nice weekly candle. How are you gentlemen
Yeah.
reconciling
So,
with that?
empty. You sound like a great guy. I just, the shorter the time frame, the more of a waste of time it is for me. Because it's like, look, it's hard enough to try to get the longer term right. At least you can think about fundamentals evaluation. When you go, the shorter term you go, the less relevant fundamentals and valuation become. And so I'm sorry, I just don't want to talk about it this week. Okay, put a gun to my head. I think gold and silver are going up. It's simply based off the price action that I discussed with nobody on Friday. That we now have the increase in uncertainty and the problems with the tariffs. I'm going to give nobody the last word, and we're going to close the space. So nobody, I don't like to invest in it. So empty. Whatever I tell you about the short term for gold and silver is dwarfed by my intermediate to longer term view. I don't know, nobody. I want you to close it out. If you have you basically articulate your views, nobody, on either the short term or the immediate and longer term on gold and silver. Nobody, the floor is yours.
Long term, I'm very bullish gold and silver, and the gist of it is when things light off in the South China Sea, which I really hope they don't, but it looks increasingly increasingly inevitable that they will. When that happens, the biggest weapon in the U.S. arsenal isn't their nukes, it's not their navy, it's the U.S. dollar. They will unleash the U.S. dollar by looting the entire world in order to finance a World War II style military buildup to come to Taiwan's defense. I hope this doesn't happen, but I think it's going to happen. And when that happens, not enough gold in the world. And look, a lot of the military academics are saying next year that happens. So we're not talking like super long term here. We're talking next 18 to 24 months, possibly.
Well
Okay,
said. All right,
okay.
guys, we're gonna have to stop. 2 hours and 20 minutes. I'm hoarse as hell. I would appreciate anyone who's listened to all this stuff either post a comment or DM me. You thought it was not enough, or this is perfect, or bring it's George Unhinged. I bring it to you straight. I could be wrong. I will be wrong. I guarantee you that. I'm giving you what I believe to be my honest opinion. I've been doing this a long time. I live in my integrity. And I'm usually more right than wrong. So do with that what you want. Last thing, I'm trying to do this conference again, March 11. I want a big turnout. Please retweet the conference thing. Please sign up. It's only $99. Yeah, Schmuckatelli, I agree with you. We're not going to go with Taiwan. I'm with you, but that's another story. It's not going to happen. But we still got plenty to worry about with the dollar and the gold anyway. So Schmuck, I see you. Yeah, I'm with you. We're just, this is not going to be a Taiwan war, but leave that aside. So in any event, I really want you guys to sign up for the conference. $99. And then, the Substack, it's 45 a month, it's 540 for the year, but the annual plan is only 450. But wait, and there's more. If you sign up for the 450, you get a free ticket to the conference. So for 450, you're getting an annual, which is worth 540 plus 99 for the ticket. So you're getting $640 worth for 450. And this is going to be the best conference you've ever seen. My Substack is going to be the best. We have like 8 or 9 different features planned. You're going to start seeing them. It's a portfolio. It's individual stock ideas. You're going to see replays with AI summaries of Substacks and Spaces, and probably the most valuable asset, you're going to be getting exclusive paywalled research from the likes of Michael Howell, John Roque, John Carl of Nautilus, Gav Cal. I mean, these are guys who know 30 or 40 years. I get their stuff. Some of it's complimentary to me because I've been a customer for so long. It's actually good for them to get the word out. Like I talked to Roque was on fire the other day. I was on his webinar, and I said, "John, can I use your charts?" He goes, "Sure, just get approval first." So you will be getting access to stuff you otherwise can't get. This is unique. Yeah, the idea of just doing more podcasts. Oh, hi, we're here today with Joe Schmo, some well-known speaker, to talk about his GDP and inflation forecast. That's a waste of time. It's not actionable. I want this stuff comes in three categories: descriptive, predictive, and prescriptive. Descriptive is just what has happened. It's like reading the newspaper. It doesn't tell you anything to do. The predictive. So, as an example, predictive would be, I think interest rates are going to go up. Okay. People on CNBC will never tell you that because they're brain dead. They don't have an opinion. So it's value add if someone with experience you respect says, "Oh, I think rates are going up or rates are going down." So let's say he says rates are going up. Fine. Then the most valuable part of it is, okay, how do we play rates going up? Do we short the long end of the bond market, the short end of the bond market? Do we buy the dollar? Do we short gold? Do we buy housing stocks? That's prescriptive. So I find the folks like Mohammed Al Arian, the king of Captain Obvious. I'm naming names and I don't care. I just don't care. I don't care. I would argue that every talking head, Kobayashi Letter, Mohammed El Arian, all this Captain Obvious stuff, all you do is recycle stuff. It's like, who can be the first to tweet something that's just news? That's all they know. They don't make predictions. They don't have to make money. I'm wrong 40% of the time. But if you're any good in this business, you're wrong only 40% of the time. Stick your neck out. You take what you want. I'm trying to help you. And so this paywalled research, I mean, there's a reason people pay these guys 30, 40, 50 grand a year. It's value add. I'll give you one snippet and I'm going to close this. Hopefully I can put this out. Everyone listen. Nobody want to run this past you. Nobody, you there?
Still here.
Last thought. We're going to play act this. I can't remember if I told you about this the other day. I don't think I did. So Louis Gabb was one of the brightest guys out there. Really makes you think. He was pointing out how in past macro cycles and decades past, it'd be the price of oil which would bring the cycle to the end. You get inflationary pressure build up. Price of oil starts to go up. That screws everything else. Kills purchasing power. Recession. Reset. Wash, rinse, repeat. Okay. But oil now has become such a small part of GDP. It's like 3% of consumer spend or something like that. It's kind of lost that relevance. You're gonna love this one, nobody. I wish I thought of this. So I was having a debate a discussion the other day with a good friend. We're talking about the semis. I'm not in the semis. I'm not long. I'm not short. He made a ton of money in semis. So good for him. But it doesn't matter how much money you've made in the semis. Like, where are we going from here? And I invoked my inner Louis Gabb. I just read something, and Louis wrote something. I'll send it to you, Jack. I'll give it to you. Take a look at it. It's a really good piece. And the gist of it was, in decades past, it was oil. That was the carrying the coal mine, telling the cycle was over. He's like, now it's going to be chips, because chips is a constraint. And the use of chips is so ubiquitous. As you've seen, Jack, the price of chips is, and what he's really worried about. I mean, he owns the semis, but what he's worried about, it's not. He's not worried about the hyperscalers running out of money. That's not. He is. He goes, the big worry for him, what he's worried about, and he says is Micron being one of his biggest holdings, is that the price of chips goes up so much, and you're already seeing this now. Apple announced they have to increase the price of that. So and so's got to increase the price of this. Blah 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 blah. It actually starts to have an inflationary impact on the economy. So everyone's looking at the oil price. He's like, no. What if the price of stuff starts going up so much that Apple decides they got to raise the prices a lot, or whatever, and prices go up a lot, and maybe demand starts to go down. So his point was, in the new economy that we're in, the thing to look at is semiconductor prices, not energy. What part of that, Jack, do you agree with or disagree with?
I agree with that to a certain extent. Yeah, I mean, you're already seeing it. Listen to some of these gaming channels. all the guys who build gaming PCs, and they're furious right now because Nvidia stopped making retail consumer graphics cards because the memory prices went so high and everything is going to AI.
Yeah.
And so you're already seeing that spread to some areas. And along those same lines, as inflation being caused by the data center build out, one of the biggest gains in the CPI that just came out last week was utility pipe gas service and electricity. Pipe gas 9.8% year over year, utility electricity 6.3% year over year. So you're already starting to see this silly data center build out show up in other areas. And once inflation gets into energy or gets into chips, which goes into other consumer products, it has a way of spreading. We saw this in 2021, right around the time the Omicron variant came out. We saw oil prices start to go vertical, and 2022 inflation took off. So
Yep.
yeah, I would agree with that.
Yep. All right, listen, I'm going to stop. Again, I want to panhandle, but I'm very clear about this. It's not a question about what I can afford or not afford. It's a question of doing the right thing. I've done all these spaces for all these years. Stopped for a year or so. I didn't make a single penny out of them. I did them because I want to help people. We raised $260,000 through the GoFundMe page for World Central Kitchen. All you guys did good. I would just say, as a point of pride, it's not about the money. It's about being validated and appreciated. If you guys can't or won't spend $99 for a conference or sign up for my Substack, I just won't do it anymore. I mean, I don't want to charge for spaces. I'm not going to do that. But this idea of, you're just trying to make money, take money off you. How many hundreds of spaces have I done for free? Or give away research for free? People don't like things being taken away. But, it's enough already. You get what you pay for, you're not going to get what you're not going to pay for. So, I'm going to make it increasingly difficult for people to get to access to. Again, it's not about me, not my great thoughts. It's about, if you value these conversations, if you value getting free research from Louis Gaver, Michael Howell, you're going to have to pay for it. Everyone loves free. Free is a good price. That's not right. You know it, and I know it. Just because that's the way it has been. Sort of like, some of the newspapers have gone to, in the internet world, have gone to the digital model with paywalls, because they should. How are you supposed to pay journalists if you can't generate any revenues? I'm telling you, all the free riders who want free, you're not going to get it free anymore. Not a threat, just a statement. I'd rather make very little money and do it behind a paywall. At least know I'm not being taken advantage of, because it makes me feel I'm violated, than giving stuff away for free. And when freeloaders keep wanting free, fine, okay, fine, no problem. You don't have to pay me. I also don't have to give you my thoughts. I don't have to give you Michael House free research. Deal. You decide. Nobody. Can we do this again next Sunday?
Sure.
Awesome. God only knows what's going to happen this week. The stories keep writing themselves, as we say.
Nvidia earnings this week, so we'll probably.
Okay. Break in. We expect you back 11 o'clock next Sunday with the NVIDIA report as well. Again, it's not the news, but the reaction to the news, which is going to be so interesting. So thank you, Tina. Thank you, Nobody, Empty, Joe Carlasari, Peter Boockvar. I forgot. This has been awesome. We're going to do it again. Thanks, everyone. Have a great day.